me give you guys an update here because we've been running this butterfly condor for a while now. I'm going to take a look at how it's been doing because we've been focused on this in class for a while. Well, holy crap. Wow, I didn't know it was doing this well. Um, okay, so here's the butterfly condor that we've been working on the past few weeks, guys. Here's how it's actually been performing. Since March 6th, up 21%. I'd say that's a pretty damn good thing. Uh,
Nice.
yeah, yeah. What is that? That's working out to being, well, it's been 3 weeks now. So I guess it did about 7% a week, not including compounding. That's pretty damn good. Wow.
Awesome.
Awesome. Great.
Where do I mail my check?
Well, actually, I just called up Tradier today, and I'm going to be moving over 30K into this algorithm sometime this week. So
Uh,
I got their form to fill out to actually transfer money for an IRA, and hopefully I'll have this thing actually working with real money. Um, I don't know, however long it takes them to do it, right? Hopefully, like Wednesday, Thursday, they'll have that transferred, and we could actually start testing this and seeing if we get the same results with real money, right? 'Cause
mm,
if it
yeah.
can do this with a paper trading account, I want it to do this with real money too. You know what I mean?
Right.
Yeah. If it can, if the back tests are right and it could double your money every year, I sign me up, I'm definitely sold on it.
Yeah, that's a good one.
Yeah, absolutely. There's actually some ideas I have on how to improve it too, if you guys want to go through that today too. But so far, so good. I mean, it's living up to the hype, right? We're actually even going to be adding in a feature to LumiBot as well. That's going to, I think, even further improve this because it's going to be, instead of placing individual trades, it's going to be placing them as multi-leg orders. So I think this will even further improve this strategy.
Yeah,
And
that should help
yeah,
with
no,
slippage and
yeah,
commissions.
yeah, exactly. It will basically, with all you guys are talking about, the problem of PDT rule, it will solve that, right? Because it's going to be one trade as opposed to four trades, right? So you can actually run this several times per week, right? So for those of you guys that don't want to put in the 25K, you can actually put in less once we have this feature up and running. So I'm going to be working that on Monday, hopefully get that out. But here's the new one that we built. You can tell it's the new one that we made last week because it actually is holding on to QQQ as well, right? Which is the thing that we modified last week, right?
All right.
Yeah. Cool. Okay. All right, but let me go through a little spiel here for everyone who's new. So get you guys kind of up to speed as to what we do in this class and how all this works. So welcome to the live algo hour. Actually, we renamed this to be live algo building sessions because live algo hour is kind of a misnomer. As you guys know, we definitely spend longer than an hour a lot of times. So we renamed it to Live Algo Building Sessions, right? It's the open house today. Like I said earlier, we do this about once a month, actually exactly once a month. We do an open house just to allow other people to see kind of what we've been up to. What do we do in this class? So you can kind of try before you buy, I guess, or see what we do. Basically, this is what we do during the class. This is what we're going to do today. This is what we do every single week on Tuesdays. We basically have training idea presentations. People will submit what is it that they want to work on, right? We've been in this class, we've been focused on kind of one or two algorithms for the past few weeks, but we can really work on anything that you guys have that you guys find interesting. Usually, people present kind of their best ideas, and then what we'll do is we'll do a vote, and we'll basically say, what do you want to work on, right? And we'll vote on that thing. Then we'll actually build the algorithm, then we'll tweak it, and then you guys can get and run the code afterwards. That's limited to the people that are on actual our pro plan. Um, Ethan says, okay, proposal. This is what you want to work on today. Okay, got it. Okay. All right. Okay.
It's
So
an idea. You have
okay,
time.
we'll go through this when we get to that point. Okay, cool. So again, thank you, Esan. We'll definitely include that. Okay, so again, first thing we do the trading idea presentations. If you guys have any ideas, like Isan just did, he proposed an idea. Here's one thing that he would like to work on today. So if you guys have ideas, please let me know. You don't have to be all formal like this. You can kind of just talk about it, turn on your microphone and say, hey, I'd like to build this. This is an idea I have, right? You could propose an idea. Right. We could also develop things that we've been doing in the past, which is kind of what we've been focused on the past few weeks, because we have some pretty amazing algorithms that we're trying to improve on. Then we're gonna vote on what we want to build. I'm gonna put out a poll. You guys will get a chance to vote on it. Then we'll build the actual algorithm. I think that's self-explanatory. I'm gonna be writing code. You guys can kind of contribute to what it is you want to have built. Then we're gonna tweak it. As with any kind of algorithm, you want to tweak it and improve on it over time. And then you can get and run the code. That's going to happen after class. You guys can actually get the stuff and run it yourselves, right? And quick little sales pitch here. Actually, these prices are different now. We no longer have these prices. So for those of you guys that got the cheaper prices, good for you. But our pro plan, which goes for $349 per month, what you get with that pro plan is you're going to get the live algo building sessions, which is what we're doing right now. You're going to be able to join these every single week on Tuesdays. You get the recordings of them too, if you prefer to watch the recordings. You don't want to show up during this time. And you're also importantly going to get the code, right? So the things that we're working on today, you'll actually be able to get that code and run it. Okay. Number two, you're also going to get access to all of our workshops. We run a lot of workshops. The next workshop that we're going to do is probably going to be on running this butterfly algorithm. I'm going to show basically all you guys how to do this, and we'll get everyone set up on Tradier and run all that stuff. But we do lots of workshops on a regular basis to help you kind of run your first algorithm and do a bunch of different things. We're probably going to be doing workshops in the future on like AI, how to use AI in an algorithm. We're going to be doing a bunch of different things to get access to all those. You get access to our trading signals, which is essentially this here. You can follow our different algorithms. Here's a bunch of our different algorithms and how they've been doing. Here's our butterfly algorithm, for example. You can follow all the times it makes a trade. You can see what trades it's making, what percentage of the account it is. It'll show you a graph of how it's done over the past week, gives you an update on its performance. This one, for example, did again 21% improvement since March 6th. This is paper trading. I will hook this up to a live account very soon. You guys can run it, see it there, but paper trading, live trading, there's a lot of similarities. This is not back testing. This is actually trading. So you can follow these things. Here's like, for example, I don't know, rolling calls. This one's doing a little weird stuff. Diversified leverage. Here's another one. You can follow how this thing's been doing. I have to reset it. But it's been up, it's up 2.4% since March 18th, since I reset it. So pretty good start. Before I reset this thing, I actually have real money in this thing too. I almost doubled my money, I think, in the past year using this algorithm. So it's doing quite well. Yeah, but basically you can go through each one of these things and see how they're performing and see what it's buying and all that sort of jazz, right? So you get access to all of our trading signals. You also get access to our Discord community, which is this thing here. We talk a lot in this Discord community. This is something that's very popular. It's very active. I think you guys can attest to that. So if you're building any kind of algorithms, you need help or whatever, this Discord community is a fantastic thing to be a part of. So you get that as part of the pro plan. You also get the Python for Finance course, and you also get our algo trading course. So these can help you learn how to actually build algorithms and that sort of thing. Okay, that's our pro plan. I think kind of the key here, actually, I'll even, it's not included here, the strategy library, right? Pro version, right? I think this is one of the things that people care about the most when they get the pro plan is you'll get access to our code. You get access to our strategies. You get to actually run them. You get to be part of this Tuesday class on a regular basis. Then if you want to join our all access plan, that's kind of the top tier thing. You'll get everything in the pro plan. You also get recordings to all of our different classes. We have lots of different classes that we've done over the years. You get access to all of them. You also get 2 one-on-one hours per month. We don't really we're not really tight about that. So if you want to have more time than that, you'll probably get it. And then you get basically full service. So if you want us to basically set up algorithms for you, monitor them, and run them for you, we will do that in the all access plan. All right. Cool. Any questions about what we're going to do today or anything that I just mentioned before we get started?
Hey, Robert, this is Stacey. I have a question. On the trading signals, I'm seeing more on your trading signals than I see on mine.
Yeah, not all of them are public, because some of these here I'm still working on, right? Like our Condor Martingale, this one's still malfunctioning, so I haven't put this out yet. Right?
Okay.
There's a couple on here that are only on mine because I'm testing them.
Okay, I see now.
So that's to be expected. But you're going to see more and more of these over the next couple of days because I've been, kind of resetting a couple of them and adding more in. So you'll see a bunch of these shortly, right? There's also stuff that I'm working on for clients and whatever, right? Okay, cool. Any other questions, guys, before we get started? All right. Okay, so let's get into that first phase. So what do you guys want to build today? We have a submission here by Isan. We can read off what is happening here. So Isan, do you want to maybe explain what it is that you're interested in building?
Sure. Yeah. The strategy is to capture one swing NASDAQ trade per week with minimal risk and minimal drawdown. And sort of the overall goal is to do better than buy and hold with smaller drawdowns. And the strategy is before they open on Monday, get the QQQ previous week's high and previous week's low, calculate the midpoint. Then on Monday, say in the first hour after the open, buy the QQQ if the price at that time is above the midpoint and just let it run all week. But a stop loss if the price drops below the midpoint, and then sell at the close Thursday afternoon, because Friday usually kind of bounces back from whatever happened most of the week, usually, right? If the opening price or the first hour price is below the midpoint of last week, then buy QID, and the stop loss would be the QQQ midpoint, and also sell that on Thursday. So that's it. Pretty simple.
Okay, so what is QID? Oh,
It's
short.
two times short.
Okay, 2 times short. Okay.
Your favorite thing, right?
Honestly, I like the idea of shorting. I just have yet to see things that make money doing it.
Yeah. Well, we
I would
could
love to
switch
find
in.
things that make money doing it. Like I think that's like the holy grail. You know what I mean?
Yeah.
Find that with long strategies, you have a very good payout that way.
Yeah. Yeah. I agree completely.
Yeah.
So
Okay.
I've kind of manually tested this and thought about it for a long time, and I'd love to see what the back tester does.
Awesome. So can you maybe explain why you think this is a good idea?
Yes, because QQQ does have big drawdowns from time to time, although you wouldn't know it by this year so far. And this cuts those. So it's Dakota's basic philosophy of let your winners run and cut your losses short. So it cuts the losses when it gets to the midpoint. And there'll be some whipsaws, of course, but I think overall it should perform well.
Okay.
And it's not exotic. Anybody could do this in an IRA or anything like that. It's not, you're not shorting, you're not doing any exotic derivatives. So it's kind of a plain vanilla, follow the swing trade trends.
Okay. Cool. Sounds interesting. Definitely very easy to build. I think there's something we can knock out in like half an hour.
Wow, nice.
Well, you saw how long the last one took, right?
Yeah.
It's quite easy to build. It's just pure stocks. We're only looking at, a week of historical data. It's not like anything that complicated.
For
Okay.
those who are new, watching Robert code is like watching Mozart play the piano. He just kind of does it, and it works the first time. It's amazing.
Thank you. I appreciate that. Yeah, these days it's AI doing half the work anyway. So
So
okay.
if that's interesting, then love to do it.
Okay, cool. So I'll add this as our first choice. Maybe we'll call this swing trading.
Yeah, QQQ swing or something like that.
QQ swing trading. Okay, cool. Sounds good to me. Let me okay, so I added that to our list. Let me answer a question really quickly. Frank, you said you want me to add you to trading signals. That's something that you have to do yourself. You have to go to lumiwealth.com, and basically you have to sign up through trading signals setup right here. Under my account, trading signals setup, you have to follow these steps here, right? My guess is maybe you haven't done step 3. I also recall that your subscription got canceled or something like that. I still need to get you the fix for that, because I know that there's like a technical thing that happened there. But basically, yeah. So make sure you go through these things here. Let me send this to you. And then you have to have a live account for this thing to work. So maybe that's why it's not working. Or maybe you just didn't finish step 3, right? Most people, they don't finish step 3, right? So that's why I bring that up. So every time someone tells me it's not working for them, I go to this page, go to step 3, complete that. And that usually gets it to work. But again, I know your account is in some weird state right now, so I need to get you the fix for that. And that should get it to work too. All right. Cool. Okay, awesome. All right, so we got no problem, Frank. Okay, so we got one strategy up there. I'm going to throw in 2 as well. These are the ones that kind of we've been talking about for a while now. I'm going to throw in this butterfly strategy as well. We can continue working on that. Last time we were able to increase the back test results to like 89% a year. For those of you guys that are new here, this is what I'm talking about. This is our butterfly condor strategy that we've been working on. You can see here 89% a year is what we got on our back test, or over this time period from 2020 January up until about today, 1,354%. I don't know about you guys, but if I got 13 times my money in 4 years, I'd be a very happy person. So that's why we've been kind of focused on this over the past little bit. So I'm going to throw this strategy up there as well. Not only are the back tests doing really well, but it's working very well in paper trading as well. This is again that 21% in 3 weeks. Again, I'd be very happy if that happened to me with real money, which is why I'm going to be putting real money into this very shortly. So I'm going to throw that in there. It's called a butterfly condor. And I'm also going to put in another one here, the condor martingale, which is kind of where this whole idea of this sort of started, I guess. I know, Kevin, you submitted the butterfly condor to begin with, but I feel like this is like it all came from this sort of seed at the beginning. I don't know if you agree with that or not. But I'm going to throw in the condor martingale because I do really think that we can actually do quite well with that strategy alone. I've seen other people make like 200% a year doing it. Why can't we? If they can do it, why can't we do it? I think with a couple tweaks, I actually tweaked a bunch of it myself too. I think the best that I saw was like around 50 something% a year. And then if you're allowing yourself to go into margin, it could go up to like 100, 200% a year. But I think that we can actually really improve that one too, the condor martingale as well. All right, so I'm going to throw those 2 in there too. Anything else that you guys would want to work on today? Anyone else have some trading ideas that they want to have built?
I'll suggest something but I'm in the back of the line though, so I don't want to skip anybody.
There's no line. There's no line.
Okay, great.
We're going to vote
Let's
on
dive
this
into it.
afterwards. So
All right.
convince people to build your strategy.
Yeah, it'll be really quickly. I'd just say I'd go in and look at building agents and have agents assigned to different tasks, one of those tasks, I would look at what to mine, and I would apply a trading strategy based on the top performing cryptocurrencies and what to mine. And so the deployment of capital would be multi-headed. This would be one of the areas, and I think the weights would be on performance. So you'd deploy all your strategies, Robert, and put a weight on it based on performance. So they're all running at once. I would deploy that strategy. What do you guys think?
So hold on, let me see if I'm understanding correctly, because it sounds like you're talking about two different things. One, you're talking about follow the top cryptocurrencies. And then another one you're talking about just run all of our strategies at once. So am I correct in that? Is that there's two different strategies that you want to work on, or? Hello?
Is working the best on the matrix of the trade, and I would condense the trades maybe to like every 3 hours, because those are the usual the iterations on chat is 40 requests in 3 hours. So every 3 hours I would close everything out, but deploy your trades in and out based on performance or your performance metrics that you can adjust. One of those trading methods should be the what to mine top performing cryptocurrencies. So you're always investing potentially in the coins that are in their upward trajectory of their exponential. So both, Robert, but one of the techniques is a subset of the overall weighted deployment of capital based on performance.
Okay, I see. So to run all of our strategies at once, that is a fairly complex thing to do. Because we kind of have to get all of them going at once. Although I have built something like that before. There's actually some code that I have that what it did was basically when you back test a bunch of strategies at once, you could actually merge all the results together, right? So it's kind of like if you had built a hedge fund to trade all of them at the same time. So we could explore that if you want. That sounds kind of interesting. So we could say, is that kind of what you're getting at, right? That we'd run a bunch of our strategies at once and kind of just get the average result of all of them?
Yeah, and then put the weight on the ones that perform the best as the overall strategy. And then one of those strategies or a subset of the main strategy. And the way those I would recommend doing that would be by creating agents. So each strategy would have an agent. And the agent can also have an assistant. And one way to build that would be using some kind of modeling interface like Crew AI, which is a GPT. So you could use the Crew AI to build your agents. Y'all with me? And then an agent's on each algo, and there you can ask it to see. You can even use plain speech to text to see who's doing the best at any particular given time. But one of those agents I would put on what to mine. So it's looking like, hey, what coins are going off right now? Let's go. It's reaching its peak or it's crashing. Get out of it.
Okay. Crew AI, how do you spell that?
RAWAI.
Yeah, like
I think I
Crew
was
AI. It's
talking
a
to you about this.
GPT. It's a GP. It's a chat GPT. Use the 4.0 though. Like get out of 3.5. 3.5 is good, and don't like lose your models because all that stuff gets deleted. But if you like it, but use 4. And if you or for Turbo, I don't know if you guys are just doing the monthly, because if you're paying for data, sometimes if you, I don't know, if you're running certain models on LLMs, I was like, dude, the processing power is mind-boggling. I mean, we're not running on new NVIDIA infrastructure, but yeah, check out that. There it is. Crew will give you agents, so you take an agent on each algo.
So why would
An
I
agent.
put an agent? Why would I put an LLM on each algo instead of just monitoring their results and just say which one is doing the best? I mean, like, why would I need an LLM?
Well, because they can all communicate to each other and tell you that without you having to do that. Because if each one each algo is assigned to one of these agents and they're all talking to each other. You just have to ask crew, just tell me who's doing the best out of those agents in the last 3 hours, last week. And then you can also build a structure where the CEO is another kind of super agent that is like, okay, of all these different deployed things, tell me who's doing the best, and do a weighted average of their performance and do it that way. But the agent can handle the information request and you can interact with it, speech to text. So you could tell it to watch that algo. And then it'll tell you how it's doing. And then the master of those agents, its manager, you could say, okay, who's doing the best of these agents? And then you can go and refine the agent by that agent is the algo, and you can go and agent, you know what? Let's refine these aspects of you. Are you guys following me on this?
I think I'm
I can
following,
build it,
but
Robert. I don't want to take up your time. Why don't I start building this, throw it out there, and try it?
sure. I mean, no, you're definitely not wasting time. Let's start with that because that's what the whole point of this is, right? That we talk about these sort of things. So definitely don't feel like you're wasting time. I wouldn't worry about that. I'm just having a hard time understanding why I would need to talk to these things. Why can't I just get the data directly? Because it's actually pretty easy to do that, right? Like we could just see how each one of them are performing and just get whichever one's doing the best. I actually think it would be harder to do with an LLM. I think that adds complexity to it that would make it more difficult to do, right? As opposed to just getting the data and putting it into a database and having one LLM look at that database, right? Instead, or whatever, you LLM or AI or whatever, right? Can look at
No, I
that.
understand what you're saying. That totally, and that system works. And I'm not saying that doesn't work, but the system where I think where the agent comes in is the agent can work autonomously and on that algorithm. So instead of having a static algorithm, you can go and put the algorithm in the agent, and you can work on it within the agent, if that makes sense. So the algorithm is each agent. It's a way of modeling the algorithms, I think. But I think I should work on a base model and get it to work. And then give a demonstration. Give me some time, because I can see what I'm thinking. I see where you're from. It's a different framework of approaching it from a generative framework rather than a fetch and retrieve framework. So you want to think, how do we generate the data? And that's what the agent does. But let me try and build a model or some kind of way of showing it visually or graphically, at least.
Okay. Yeah, I mean, this definitely sounds interesting. I'll tell you that much. Like anything AI is, I definitely find interesting. This is all very brand new. Um, I would love to see how it works. I'd love to see like how you actually envision doing that sort of thing, putting in an algorithm inside of an AI agent. I'd love to see how that actually would work out. Okay. I'll add that to the list. I think that's interesting. So what should I add to the list then? What should we say that this is? This is using an AI agent to because you're talking about several different concepts all at once, right?
Correct. One is the way that I think the input for this would be a fetch request, or a query would be a weighted trading algorithm based on total algorithms. Period. Stop. Refine that, but that's the core idea, as succinct as possible. That's the overall objective, right? And then underneath that objective are the algorithms themselves, and each algorithm can be adjusted and self-taught is where we want to go with the agents. And that's where the assistant helps. So the agent and the assistant can talk back and forth, and the assistant can go fetch data on a real-time basis, or as real as we can get. The agent is then asking the assistant, go get this real-time stuff, or go get this, go watch this. The agent's making decisions based on that and its algorithm. Then that's reporting to its manager, which the manager is saying, we're going to take this $100 and distribute it about to whoever's doing the best right now. And the best can be a weighted average, or we can modify that. Does that make sense?
Yeah, I think
And
I'm
one of those
understand what you're
definitely
getting
should be
at.
on crypto, because that's where all the movement is. I mean, I'm looking at coins that are up 300% in a day on a daily. I'm like, this is crazy. We should be push the print money.
Yeah, there's definitely a lot of movement in crypto. There's also a lot of movement in options. It's kind of what our focus has been in the past little bit too. So, crypto is definitely one. I agree with that. Options is another thing that we can do too. There's, you can, as an example, I made $200,000 in like the past month trading Coinbase. How's that for movement? But
Excellent.
yeah, so I think we can, anything that has like a leverage to it or anything that moves a lot, I think is a good thing to trade in general. Um, to me, what it sounds like, and let me paraphrase back to see if I'm understanding correctly what you're talking about. So to me, it sounds like step one is really building an algorithm as an AI agent, right? As opposed to static Python code, you'd build it as an agent that has tasks that it has to do, right? So maybe we give it Python code or something to convert it into
It's
like,
run in Python. Yeah, I think two things. It's run in Python,
okay.
but now it's speech to text, but it also should have a JSON aspect to it, so it can connect to the web and have the API, so it actually has an execute.
Mm-hmm. Oh, somehow you got muted. Sorry, I don't know. Maybe that was me by accident. All right, there you go. Sorry, you're muted there. You
Yeah,
gotta.
sorry, I muted myself.
Oh,
I
okay.
feel like
Okay.
I've exceeded my word quota.
Okay. Yeah, it's no problem. So okay, so I guess the first step in something like that would be to turn an algorithm into an AI agent instead, right? I think that's an interesting idea in general, right? Because you could have something more dynamic. I think there's a lot to be said for that, right? Instead of having fixed code as a strategy, you could have an AI agent that is learning from its environment and adapting and that sort of thing. I think that'd be very interesting to build. Um, I think that alone would be a project in and of itself. And then it sounds like you're kind of trying to take it from that stage to go to the next stage where you have something where you have multiple agents and then you have like almost a manager of all those, right? And trying to get the best trades out of all of them. Is that
Bingo.
yeah?
That's
Okay.
it.
Okay. So why don't we do this? I could add to the list because I think that that whole like running of multiple agents, whatever, that's like the step up from the first building an AI agent to do this stuff. Why don't we add to the list building an AI agent that trades, right? Do you think that's a good um thing that we could
Yeah,
try
I'll work.
out today?
I, I think it's a great idea. I just wrote that down. I could even build one and try it, or everybody could build one. I'd love to build one, just make it open source for you all. At least
I'd be very
contribute
interested in
to
seeing that.
the.
That sounds like a very cool thing to try out. Because a
Cool.
lot of
Yeah, I'll get
people
over to Discord.
yeah, a lot of people use like basic AI stuff for this. Like, you'll get like someone from what was it called? Hugging Face, right? Like they have a bunch of stuff in there and they'll kind of use those things. But
Absolutely, Hugging Face, 100%. Yeah, I mean,
yeah.
I've subscribed to all of that. Hugging Face, anywhere to condense, even the math, even looking at the one over the square root of the d, just to make it work. But yeah, Hugging Face, great.
Yeah, they have a lot of good stuff in there. I've seen people use those models to, you feed it some data and it kind of just tries to do whatever. But if you were to build an agent that has the ability to actually go out and seek data, that's a very different story, right? That's a much more advanced piece of AI. And I can imagine that's possible. I've seen, the things like Devon or whatever, they've been doing that sort of thing. Why can't we build something like that? I think that'd be
That's
very,
what the assistants do. Yeah, just if so excuse me, in these models, that's what the assistant exactly what the assistants do is you build the agent to then have an assistant that fetches data. And the assistants are designed to fetch the data.
yeah, that sounds very interesting, actually. Let me read off. Some people wrote some stuff here in the chat. Aaron said not understanding the AI. Yeah, but we kind of went into that already. AI-driven algo management. How about just watching volatility on top 500 coins by market cap? That's another thing that I think would be very interesting too, is kind of because you mentioned one thing in here as well, Will, is we could just look at the top crypto coins and kind of just look at those, right?
Yes.
Buy the top moving crypto coins, right? Like that's a pretty simple thing to do that we could also try. So I'll add that to the list as well.
Data scrape source recommend whattomine.com. WHATTOMINE. What to mine.
Is this it? How do you spell it again?
Sorry, that WHAT what TO mine MINE. It also lists all the rigs that bang the coins, but you can look at the coin performance there as well.
So whattomine.com.
Yes, excellent data scrape source. If there's a better one, yeah, let me know.
Interesting. Okay. So buy the top moving crypto coins, whattomine.com. This actually sounds pretty interesting. Okay. Whattomine.com. So we have Radiant, Cortex, Dynex. Yeah, I guess we can scrape this page if they allow it to be scraped. Sometimes they have like weird things to not permit that. And then the other thing is that we got to be mindful.
We could always apply a text. Yeah, visual. We could always apply a visual on it though, like a image to token.
That's true. You just have it run like a headless browser, take a screenshot, and then have like an OCR type thing go over it, right? Is that what you mean?
Yeah, that'd work. There's a lot of different inputs, but yeah, we do like some kind of visual screen capture that's analyzing and capturing the text on the screen and then tokenizing it. I mean, any kind of visual screen that could take that as an input.
Okay. Cool. That sounds interesting. These both sound like very interesting ideas to me. Let me read off here. Keegan wrote something too. I think something more feasible instead of using LLMs is using reinforcement learning. I love how you think that's more feasible, Keegan. Creating custom trading environments and training AIs or agents to make favorable trades. AI Foundation, FinLR. Oh, interesting. Okay. Maybe they've made it easier to do reinforcement learning. Last time I tried to do it, it was like crazy difficult. So maybe we could run reinforcement learning on some of this stuff. Interesting. I'm glad I bought a nicer computer because now I could actually run a lot of this stuff now. I got one of those M3 Max computers from Apple, so I can actually run a lot of really cool AI stuff now. Okay, interesting. Yahoo Finance is one of the data sources too. Interesting. Okay, you get Binance, CCXT. Very interesting. Okay, cool. That sounds like an interesting idea too. Keegan, do you want me to add this to the list of things to work on?
Yeah, if you want to. Yeah,
Yeah.
it's I've played around with it. It's very hard to get right. Like all the codes there and everything, but to actually code a custom trading environment to get it right is very difficult.
Yeah, that's why that's why I thought it was funny when you said something more feasible like reinforcement learning. I'm like, what?
Yeah.
That's
Well,
really-
the code's there. It's all
Yeah,
the framework's all there, right? It's just tweaking it to get it to work.
right. Okay, that sounds interesting. Okay, so let me put this in here. Reinforcement learning for algos. Reinforcement learning algorithm. Right? Does it sound about right? Using reinforcement learning to build an algorithm or build an algorithm that uses reinforcement learning.
Yes, yeah. So essentially, it's building the environment, choosing the correct model, train the model, and then using the model to make a prediction. I think it's a classification base, so it will predict either buy, sell, or hold. That's the output. I think that the way that they've structured this particular framework.
Interesting. Okay. Yeah, so classifies as a buy, sell, or hold. And then you just basically do what it says to do, right?
And then it would just be submitting an order based on the output. So, yeah.
Interesting. Oh, it works with alpaca data too. That's great. Okay. And you've played around with this a bit, so you have like an idea on how to get this up and running.
It takes a lot. It's because it's a bit older. It runs on older versions of Python. The pack installing all the dependencies is quite difficult to start with. But once you get it up and running, there's a few things you've got to change because obviously they've stopped updating this repo. So you've just got to go through and make changes to packages and certain things. So, but they've provided code and notebooks for examples. So there's full on code and examples there for you. It's just tweaking it to get it to work is the part that takes the longest.
Okay. Yeah, as with a lot of machine learning libraries, I find a lot of them are like
Because
that.
it's research based, right? It's they don't give you the whole pie. You've got to figure out the
Yep.
rest.
Yep, that's been my experience with a lot of these machine learning libraries is spend 10 hours to try to figure out how it works and then actually use it for an hour or two, you know? Okay. Aaron says that doesn't get you around terms of use, but okay, true of all coding projects. What do you mean by that, Aaron? That doesn't get you around terms of use? I'm not sure what you mean by that. Okay. These are some very interesting ideas, guys. Okay, so we have on our list of things. Oh, the screen scraping, Aaron. Okay. Um, yeah, I mean, you're right. That's true. Right? I mean, at the end of the day, I don't know what they're gonna do about it. Like, are they gonna sue us? I doubt it. But
Heard, understood,
yeah.
acknowledged.
Sorry, what was that? Sorry, what was that?
Sorry, I keep muting myself. No, I heard, understood, and acknowledged that it would be data scraping, but we're doing it for research purposes. I think because we'd be deploying this into a playground, right, and
Yeah.
still refining the model. So there's nothing wrong with just playing in a playground.
Yeah, I think so too. I think
Until we deploy, till we actually are like, okay, whose API, what API is actually going to go rip this thing? And then a lot of the beautiful thing of this release of liability, and I'll leave it at this, is when I'm reading the GPTs in my output, they're in their legalese, verbose states. Take authorship. This is yours. This is you're taking authorship of this, meaning they're putting the authorship back on us at that point. So it depends on the output, but I think it would be ours. But a point noted about data scraping.
yeah, for sure. Aaron says ex-lawyer background. There's definitely no stupid legal point. It's definitely a good point, Aaron. But I think if we were to yeah, to your point, well, you know, if we're just doing research, I think that's fine. If we were to actually, you know, try to sell this thing, monetize it, that's a different story. But if it does actually work, you know, then we could get this data in a different way or pay them or something, right? Okay, cool. All right, so we got a couple of really interesting ideas here today. This is not what I expected, but very cool. So we have our first idea is using this methodology to do swing trading for QQQ. Basically, we look at the performance over the past week, look at the midpoint. If we're above the midpoint, buy Qs. If we're below the midpoint by QID, which is the short, right? So we're basically just looking over the past week and we're doing essentially swing trading over a week. That sounds interesting. Another one is our butterfly condor strategy, which we have been working on the past few weeks, have been getting very good results so far. Again, 21% in 3 weeks. I think that's a pretty damn good result. And our back test showing, like a 90% a year return. I'd say that's pretty damn good. Condor martingale is another one that is putting on iron condors, options trading strategies for those of you that are not familiar with this. Basically, I think the back test we got, the best one was around 60% a year is what we got out of it. I've heard of people that are using the same strategy to make like 200% a year. So that's the Condor martingale strategy. I think it's very interesting. I think there's a lot that we can do with that. Next one we have on here is an AI agent that trades. That's Will Your Idea, where we would essentially, I think this would be kind of a radically different way of building an algorithm, which I think is very interesting, where it would essentially be using an AI agent to trade as opposed to some strictly defined Python code. I think that's a very interesting idea. Another one we have is buy the top moving crypto coins, or specifically, we could look at this website, whattomine.com, use their top coins that they have in here and just buy those. All right. I think that's something we could do. I think back testing this might be a bit of a challenge, right? Because we'd have to have somehow a historical snapshot of what happened on this website. That might be a bit challenging, but doing
We
it.
could solve that problem by just looking at the historical performance of each coin.
Okay. Okay, so I mean, we could even just go that route without even doing the what to mine. We can literally just get that data, which we already have from Polygon. But either way, using, looking at the top moving crypto coins and trying to buy those, I think that's an interesting idea in and of itself. You're right, there's definitely a lot of them that are moving quite a bit. So I think we can make a lot off of that too. I think that's a good idea. Then another one is using a reinforcement learning algorithm, which is, I guess this is one potential way of doing it. There might be other libraries we could use too. Not sure how much you've researched this, Keegan. My guess is you probably have researched it because that's what you do for a living. So you probably have researched it a decent amount. But this is at least one library that we can use, and maybe we could even explore this a bit further. I think the idea of using reinforcement learning is a really good one. We've talked about this in the past. I think reinforcement learning would lend itself very well towards the stock market, because that's essentially how the stock market works, right? Like things change, you want to react to the changes that are happening. It's not like a static environment. So I think reinforcement learning would be pretty interesting. Cool, awesome. Anything else you guys want to add to the list? Awesome. Okay. So let me get this list out to you guys.
Recommend big thing for everyone in this room this evening, just to understand what's happening in the future of these algo trades. Watch the NVIDIA keynote speech. It's about a week old. It'll show you the upcoming chip architecture and the processing power. They have one particular cabinet. It weighs 3,000 pounds, and it will process more than the cumulative internet processing right now. And it's also going to robotics, but please just watch that video so you can understand. And that'll give you some backstory into how these agents work.
I'm going to watch. Actually, I've heard about this. I know he revealed the robot during that time. They're doing like a robot framework, I think it is. That I don't think they're actually building the robot, but they're building like the software component of it, right? And like how to use their
The
chip.
bots are up. They're up. You can buy a Robo Doge for $1,600. I got it this morning on Twitter. Robo Doge. It's like, how come this isn't on the news? Is this real?
What?
It's a robot dog. $1,600.
What? Come on.
Yeah, let me find it. It's on my Twitter. Let me get back in Discord. Give me a little bit of time. I'll post it in our Discord. Or Robert, I'll just email it to you. That's close. Is that it? No, it's Boston Dynamics. That looks like
Well, they're all kind of following the same form factor.
Yeah, this one's way newer than that. I just got it's on Twitter this morning. Let me see if I
Robodoge is
can
the name
find
of a coin, too.
Sorry, what was that?
Robodoge is the name of a coin, too.
It sounds like a crypto.
Dogecoin. Dogecoin. Yeah, Dogecoin.
It sounds
Yeah.
like the name of a crypto.
Go
coin.
Doge.
Yeah. Well, I'm gonna watch this keynote. I've been meaning to do this anyways. Now you just gave me another reason to do it. This is something I'll put on in the background after tonight. Yeah, because I heard he unveiled some pretty crazy stuff during this keynote, so I definitely want to check that out. Okay, cool. Either way, I'm gonna put out this poll so you guys can actually vote. So once again, QQQ swing trading. The first thing we talked about, butterfly condor, been having really good results so far, and really good back tests, 90% a year. I think is a pretty damn good result. Condor martingale. That's one that I find very interesting because, you know, we've seen people that have made quite a bit of money doing that. Like I said, some people made like 250%. I heard some people using that technique. AI agents for trades. I think that's very interesting too. A very different approach to how to do this stuff. I think there's some really cool stuff we could do there. Buy the top moving crypto coins. I think that's another interesting one, what to mine. And then reinforcement learning algorithm. I think that'd be pretty cool too. Although maybe a little bit more of a technical challenge. I'll let you guys vote on that. The poll is out. I see a bunch of you guys have voted already. 9 out of 18 people have voted, so we need 9 more of you guys to actually do the votes. And while you guys do that, I'm gonna go grab some water, use the bathroom, and I'll see you guys back in about 5 minutes, 5-10 minutes. We can actually get started on whatever you guys voted on. All right. I'll see you guys very shortly.
Unitree. I'm gonna put it in the chat. Unitree. First robot.
Will, is that your
Is that
actual
real?
last name?
Will Wild. Yeah, that's really my name. Will
That's pretty
Wild.
cool.
Yeah. Yeah, it's pretty cool. Yeah, I would highly recommend watching that NVIDIA keynote because our whole model architecture of computing will change from data storage and capture and retrieval to generative. And the whole system model thinking is more aligned to understanding chaos theory and applying advanced mathematical, because you zoom out, you get fractals. And we're achieving that through generative content. Most of the content on the internet, 60% or so, is generative already, and people aren't really know that. So the NVIDIA is saying they're really going to ramp up efficiency and processing power in a massive way in order to accommodate self-learning and robotics. They're already made this stuff and it's publicly available. Yeah, everyone here, it's really hard to put together. I crashed systems and it didn't work. This doesn't work. And then it'll work. I'm like, did that work? I can't believe it worked. It freaks me out when it works because this stuff's so powerful. I don't know why anybody else isn't freaking out right now, but maybe I'm overreacting. So, and I'm getting emotional, so I'm out. But it's a great class and great resource on FINRL.
Oh, okay, awesome. So, this like $1,600 dog, right? What would it help us with?
Can you? I don't know if that was who was that directed at?
This is Albert. I'm just trying to find more. Do you have any articles that you could talk about, or kind of are you gonna bring show a diagram of how you're
I understand and I think one thing to really help
hello?
this. Yeah, hi, can you hear me?
Yes.
Can you hear me? Okay, good. I think
Yeah.
one thing that helps contextually answer that question, if it's directed to me, is understanding new chip architecture. Meaning all the investment, dude, billions of dollars into a chipboard. He's like at a $15 billion chipboard, is designed differently than the way we're doing this thinking. Right now, we build a system, go get the information, bring it back, let's make a decision. That's history. That's not how
No, I know.
this new system works. It's
Yeah.
like, what do you ask it what to order? Would you put these words in for me, please? And it tokenizes and weights every word and comes back with the next logical word in the sentence. Then there's generative AI and modeling, but that's all plugins. So you can really have it. End of the day, if this has a JSON input, is anybody with me on the JSON input? Then it can execute with servers, right? And I know Microsoft Copilot puts the brakes on. They're like, we can't do that. I'm like, come on. And anyone who wants to do this, you can go do it on Google Colab. It's already a Python, and they'll give you a GPU. I mean, there's no excuse not to run any of these things and look into the theory, because you can download an MML and run an MML like through Colab.
Okay. Very cool.
Or
all right.
you can use an agent. You can just use an agent to do it for you from natural language processing. So that whole step is so much easier. Code's tough, but I would say use NLP to interact and pick a good voice. Follow the AI today and go look at the new top 10 voice translation, natural language processing. Companies blow your mind. They're emotive and they generate context. This stuff that's going to come out like any day is better than human. It already does it. I already construct this. You can just go play with chat and 4, but get out of 3.5, and try and get into 4.5.
Well, I have access to a lot of Azure stuff, so definitely I want to play with this. Is there a way? I'm going to drop my email, right? Is there a way that?
Yeah.
Hold on.
I can send you. Just sign. I would hide. Okay, are you signed on Chat4? Are you running chat or any kind of like Microsoft? It will run Chat4 for free.
Yeah, no, I'm on Microsoft. I'm on Microsoft. The Azure infrastructure. I'm a Microsoft partner, so I could do a lot of this. A lot of processing I could play with.
So are you using the AI right now?
I'm learning about it. And then we're
interact
looking to
with it.
Huh?
Talk to it. It. Yeah. And ask questions. And Chat 3.5 will give you lists. Chat 3.4 will go fetch stuff off the web. And your program, Microsoft, is free. Get 4 for free. And just ask it in the command prompt. And all this is command prompt based. So we want to be as specific as possible using the least amount of words. And if you really want to figure out what this means and why this came about, not Satoshi, not the Bitcoin paper, 2017, attention is everything. It's a white paper. If you know it, if anybody know it, attention is everything. It just talks about a shift from information retrieval to generative.
That's basically a transformer paper. That's when they introduced transformers.
Yeah, transformers. There's a lot of different words in it, but yeah, transformer, LLM, transformers. Wonderful. They're pre-trained. They already spent billions of dollars doing this. We don't have to do it, and they'll give us GPUs. So I mean, all the free resources. And the amount of free GitHub code stuff you can put in your book is mind-boggling every day. If you just watch the stuff people make, I'm like, are you kidding me? And then I'll assemble it and it'll crash and they'll kick me out. But seriously, go and start assembling this stuff that all these researchers around the world are coming up with every day. And then if you just get to a natural language process agent that you work with, your assistant or your agent, or your company, you can even build companies and have that structure and have each thing doing research and figuring shit out and then coming back to a top line approach. Works really good with the way we visualize process information.
Well, I just will. Yeah, I
Yeah.
just sent you my email. If you don't mind just shooting me information, and we'll talk about it later on.
Certainly, yeah. Just bear with me because I'm using my phone.
Yeah, me too on my phone. That's why and I have to head out right now. But yeah, I'm using my phone too.
Butterfly Condor, 39. I'm very interested to learn about this butterfly condor. So very good. I'll send you. I'll get your email and send you an email, and we'll continue the conversation.
Okay, perfect. We'll talk later on this week. Rob, it was great today. Thank you. I have to run again.
Yeah, no problem. Great talking to you for the 5 minutes that you're here.
No, I was here longer. Trust me. I was listening in. I was on my phone, but I was listening.
Awesome.
Okay.
Well, good seeing you.
Okay, thanks. Okay. All right. Bye-bye.
Hey. Oh, that's great. Yeah, so you guys definitely had a conversation when I was gone, huh? Robo Doge. Oh, so it's a coin or is it actual robot?
I posted that, and that is as a coin, but there is an actual robot, but it's not called RoboDoge. It's called something else. It's called
that
Unitree.
Dog, I put in the robot dog. That's $1,600.
Oh, this is
Check it out.
This is it.
Unitree, $1,600. There it is. There's RoboDoge. It does look like Boston. They just ripped off Boston. Look at that.
Yeah.
Hello, Boston 2.0, China. Yeah, they just made it cheap and they want to cannibalize the industry. Thank you. We'll score your tech.
This is why I don't like hardware companies, because that's exactly what happens. You build something cool, they just rip you off in China. You know, basically.
Stay ahead of it. We know it happens, though. We know it happens. They know it's the industry's going to be capitalized. We have to innovate faster, but which isn't a problem because we're on the exponential curve of AI to AGI. I mean, I think the AGI world and whoever gets there first. Robert, you're primed for this stuff. I mean, you could definitely be this disruptor in the industry. It's going to happen any day now.
Working on it. You know, I actually want to raise some money sometime soon to build more AI capabilities into our platform. Like I want to raise some money specifically to build like an AI agent that can build trading bots. Like I think that'd be a very interesting thing to go down.
Okay, I think the best solution to do that, Robert, and I'm for real with this one, is reach out to NVIDIA directly, because you have the email address and the company and the history, and for God's sakes, the reputation of being, pioneer in the space. So go to NVIDIA and they have a specific email request they'll give you money to do this and build you a machine. And if there's anything I can do to facilitate this along the way, by all means, but really send that email to NVIDIA.
That actually makes a lot of sense because I know that they're funding a lot of companies like this, actually. I'm just writing a little note to myself here. Email them. Yeah, that's actually a very good idea because I do know that they have actually quite a large VC arm. Like they have a lot of capital that they're deploying towards this stuff. That actually sounds like a great idea. I will do that. Thank you for that idea. That's a great idea. Okay, cool. Also, $1,600 for a robot dog. I wouldn't mind getting one of these. I don't see a buy button. That definitely sounds very cool.
Yeah, suspect. I mean, that could all be AI gen, like total spoof, and then I see an article come out like on some obscure tech paper that it was a joke, and I'm just like, yeah, right. But it does look like Boston, and why not? Why isn't that doable?
Yeah, I agree.
I need a reason why, like some kids at MIT couldn't build that. They're like, thanks for the idea.
Yeah,
let's
100%. Sorry, hi, I'm here for the first time. Wanted to jump in because I've actually had this exact thought because as I was writing in chat, there's the design of the robot body is open source. There's an open source platform for running that body. If you're not a roboticist and don't know how to write inverse kinematics to make the legs work, And there are open source models for embodied general purpose transformers, and the LLMs. So it is very feasible for somebody with the money and the time to build one of these things in their garage for pennies comparatively, like easily $120.
That'd be very interesting. I'd buy one. I'd buy one just for
We're
kicks,
dead.
like walking around the
You
park. or
guys, we're
something.
dead. We are freaking dead. You guys get to work. Seriously, it's no joke, dude. We are so doomed. You guys got to work hard because this is released in the world as a species. If we
Yeah.
don't have the right people working on this tech, we're gonna all probably be quickly eviscerated by a malicious agent. But Dunk 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 signal the Terminator, but I do believe like this isn't the first time humanity's like experienced this, given tachyons and all that. But it's happening quietly. Why isn't this a bigger?
Because
Yeah.
we live in a media state.
Yeah,
Sorry.
definitely.
It's open source. Please continue with the open source. No, I found that very inspirational and thanks. Yeah, it's been a while for me, but I'm just back in this space here with Robert because the technology is available to execute, Robert, your initial vision, and we should be crushing it on returns. Crazy exponential returns because it's self-learning at this point, and 4.5 is right around the corner. It's best to like build it now and get involved in generative processing architecture for these models now.
I think that'd be a very cool thing to go down. Honestly, I think that's a very interesting idea. You got the second place. um, I think maybe the only reason why Butterfly Condor came in first place is because it's actually producing results currently. But I would love to explore more of this like AI agent idea. Like I think that's a very interesting idea to like build out investment robots. As like a side before we jump into this, my philosophy on investments, and a lot of people disagree with this, but I've been in this space for a long time, and I personally think that we as a society can have higher investment returns than what we currently have. If you actually look at the S&P 500 over a long time period, over like a 100-year time period, the amount that it goes up by year has been increasing steadily over the past 100 years. The average return for S&P back in like 1920 was like 10% a year or something like that. More recently, it's closer to like 12, 15% a year, right? Or at least it's approaching that. You could say maybe we're in a bubble. That's one philosophy. Maybe that's true. Another way of looking at it is just, our economy is becoming more efficient. Companies are growing faster than they used to, and things are improving. I personally don't see why we can't build trading robots or investment robots that can further improve that as well. And, if you think about it from a practical standpoint, you could have investment robots that can not only find the right companies to invest in, but also coach them, make them do better, that sort of thing. I could see a world where, everyone has much higher investment returns overall. That's kind of the, back behind the scenes thesis behind Lumi Wealth in general. But yeah, that's kind of my thoughts behind it. And I think one way that we can approach that sort of thing is using AI agents. That's my thought process, doing that sort of thing where it's not just a person doing this, because I think it's impossible for a person to possibly get that good at it. But, if this whole idea of AGI becomes a thing in the next 2, 3, 4 years, and robots are smarter than, if you have an AI agent that's smarter than all of humanity combined. I was watching some stuff today on YouTube. Elon Musk seems to think that's going to happen by like 2028, 2029. If there's AIs are smarter than all of humanity combined, then theoretically, wouldn't this thing be able to have way better investment decisions than anyone that ever existed? That would make a lot of sense to me. So yeah, so I agree with you. Like, I mean, I think pursuing this whole using AI to actually place trades, I think has a lot of legs behind it, to say the least. I don't know if you guys agree with me on that or not, but that's definitely my thesis behind all this.
No, I agree. I'd say the thing to watch out for is that everybody will have an agent that's smarter than all humanity. So they'll be trading against each other. So that'll be interesting.
Right. Yeah. And when it's like a zero-sum game, we're probably going to see similar results. But I don't think the stock market is a zero-sum game, right?
No, it's not. It's a
you know,
negative
so-
sum game.
It'd be over by then. That's at the top of the exponential curve. And sir, you were absolutely correct. And it happened with Bitcoin. We were having this conversation 2014. We're sipping some lattes. Hey, you heard about Bitcoin? Flash forward 2024. We're sipping some lattes. Hey, Bitcoin hit 70,000. How about that? Same thing with these new techs. The early adopters are the ones that can catch the exponential rise.
Good point.
Yeah, I agree. Very cool. Okay. All right. So you guys want to get started?
Yeah, love it.
Let's do it. All right. So let's get into this. For starters, why don't we actually let me pull this up here. Here is some stuff that we've been working on. And pull up our butterfly condor. Here's the actual code. And then let's pull up the tear sheet of how it performed. And then we can have a discussion as to how we can improve on this thing. Okay, so what do we want to do next? So here is the butterfly condor strategy. To explain to you guys that have not been part of these classes the past little bit, what this strategy does, it puts on a butterfly spread, which looks like this. Butterfly options spread looks like this. If you guys are familiar with, is this a long butterfly? I think we're actually doing a short butterfly, but it remains the idea, the fundamental idea remains. Basically, this is an options trading algorithm. What it will do is it will sell a put and a call here. This is the current price of the asset, right? So let's say we're doing this on SPY, right? Which is the S&P 500, right? What we'll do, and let's say it's trading at $500 a share right now, okay? What we'll do is we'll sell a put and sell a call right at 500 bucks right there, which immediately makes us money. It's a credit, right? So it means that when you put this thing on, you get paid money for this, right? Because someone else is taking the opposite trade and they're paying you for this, right? So it's like options traders will buy this from you, right? So you sell a put and a call right at the strike price or right at the underlying price, okay? And then you'll buy a put and a call further out this way out of the money and this way out of the money, right? So you'll buy your call over here, you'll buy your put over here. So what that does is it limits your loss. So you'll immediately make money. And then if you'll keep that money as long as this thing expires and the underlying price has not moved too much, right? Specifically has stayed within these green bounds here, right? So the idea is I'm going to make money as long as the S&P 500 doesn't move. I'm not betting on it going up. I'm not betting on it going down. I'm betting on it not moving, okay? Now, why do you buy these out here, right? So the reason why you sell these here is because you'll make money immediately. If it moves on you, you'll lose money because you have to do this for people because there's someone else taking the other side, so you have to pay them, right? But then you also buy these over here to limit your losses, right? Normally, if you were to just sell these two, theoretically, you could lose an infinite amount of money, right? Because if the S&P 500 shot up, it could go infinitely high. In practice, that's not true, but theoretically, it could, right? So you want to limit your losses, right? I want to limit my losses to whatever, 200 bucks or whatever it is, right? However far you put these out is going to limit your loss to that, right? If you have them closer, you have a more tightly limited loss. If you put them out further, you're going to limit your loss to something a little bit bigger, right? But potentially make a lot more profit, right? So that's what a butterfly is, right? So put on this butterfly, okay? And then what we do with this, and that alone can make you some money. Like there's traders that basically just do that. They'll put a butterfly on every day and you'll make money, and that's kind of just like this income producing asset, right? Um, what we're doing here, instead of just putting on a butterfly, is we will adjust the butterfly based off of what happens, right? So let's say we put this thing on, right? And then the price moves against us. It moves in this direction and it falls beyond this point here. Okay, we end up somewhere around here. Let's say we put on this, by the way, and we put this on at 10:30 a.m., right? 10:30 a.m., price moves against us. Okay, and we're in a loss position. What we will do is we'll convert this butterfly over to be a iron condor. And let me show you what that looks like. But essentially it is a butterfly where the two are spread out. We'll convert it over to something that looks like this, right? So notice that these are still, this is kind of the same general shape, right? Where we have two sells and two buys. But when we are in the butterfly, we lose, we basically spread this out, right? So we'll move the top one over here. If we, let's say we lost to the put side, we'll move the put sell over here. And then we'll also move the put buy over as well. And we'll convert it over to an iron condor, all right? And that's going to give us another shot at making money, all right? That's the basic idea behind this. It's a butterfly condor. There's a bunch of details that we've improved since then. What we have done is we changed the time frame. It goes from 10:30 a.m. until 3:30 p.m. specifically is what it does. It trades 25% of your account at a time. Is this 25%? I thought we changed it to 35. It's actually still 25. So technically we could actually make a lot more money than this. That's one really easy way to improve our winnings. Or actually, I don't know if this is 25, 35. Either way, that's probably one easy way for us to improve our results. Then the other thing is we have a stop loss and take profit. If we lose 25%, that's our stop loss, we're out. If we make 20%, we take a profit and we're out. We also adjust our wing size. So the size of this butterfly, where the put buys and the call buys, where those are, the size of that will be dependent on the implied volatility for the day. So depending on, implied volatility tends to go up in times of stress, right? So for example, 2020, high implied volatility. Beginning of 22, when they started raising interest rates, implied volatility went really, really high. So whenever that happens, we widen out our wings. So basically makes it so that we're less likely to lose, right? Because implied volatility basically means that we're expecting the market to go kind of crazy. And if that's the case, then we should have a bigger wing size to prevent those losses from happening, right? So we have that. We're also looking at our ADX indicator, which is essentially a technical indicator that's going to tell us how crazy is the market being today. If it's over 40, we stay out. We also trade every single day. We don't have to, but we found that we got better results when we traded every day. 0 being Monday, 1 being Tuesday, 2 being Wednesday, Thursday, Friday. So meaning we're trading every day of the week, right? We also had something else that checked the gamma risk. It was basically the relationship between the gamma and our theta, if I'm remembering correctly. The relationship between those two, we're checking that. We're also putting a bunch of our idle money into the NASDAQ or QQQ. We're putting 25% of our money into that, which is why when we look at this here, that's why 25, or in this case, 23% of our money is in QQQ, probably because the value of the account went up. It didn't adjust the amount of things it needs to buy because there's a threshold that needs to be crossed. So there's 62 shares of QQQ that we own, 23%. When we first put it on, it was closer to 25, but the account's growing so quickly that when it started at 25, it's becoming a smaller piece of the account just because the butterfly is making us so much money. So that's why that's happening there. Then what else do we have here? 25% of money is trading, and they're comparing it to the value of SPY. So again, here's our back test. In blue, we have our strategy. You can see smokes the S&P 500, makes it look like it's almost flat. The yellow is S&P 500. We're doing a heck of a lot better than it. Over this time period, when we back tested from January 2020 to March 14th, 24, the S&P 500 did 60%. This algorithm did 1,354%. How's that for doing well? Or in other words, if you do the math, it's 89% a year versus 11% a year for the S&P.
Awesome.
Sorry, go ahead.
I just said awesome.
I can't wait to put my real money into this. Not gonna lie, I am very interested to see what the results of that are. Actually, on a side note, we called Tradier today, me and my wife, and we actually got the form to fill out to transfer some of our money from Schwab. I'm transferring over 30 grand from Schwab to Tradier, and I'm gonna hopefully have this thing working with real money by the end of the week, if everything goes according to plan. So we'll see
Cool.
this thing actually work. And but yeah, I mean, if this actually pans out 89% a year, we'll be in a very good position, not gonna lie. You know, I want to put some cash into this, and you know, if you see me a couple of months from now with some very fancy stuff, we can thank this algorithm right here. Okay, cool. So yeah, so the returns are obviously great. Historically speaking, back testing wise, right? Whether that pans out in real life, we will see. I'd say
Hey,
this.
this is Stacy. I'm going to add some money too. I'm going to try this algorithm.
Awesome, cool. Let's do it. The only thing that you have to be cognizant of is that you do have to have enough money that you don't violate the PDT rule, right? Which means you need to have over 25K in its current state. However, on Monday, I'm going to be modifying LumiBot to allow for multi-leg trades where you could put on a condor or a butterfly all at the same time. And when we allow that, then it'll be counted as less trades per week. So even if you put, even if you don't put in 25K, you can still use this algorithm at least a few times a week, right? So
Hey, I'm going for broke.
you're going to put in the 25K? All right.
Yeah.
Okay. Let's do it, man. Let's see
All
what
right.
happens. Yeah, I mean, so far it's been doing really well. The only thing that I'm wondering about, and I had a conversation with one of our students about this, is the environment in paper trading and live trading can be quite different. Specifically with options, there could be a lot of slippage, right? So that's the only thing that I'm wondering whether it's going to hold true from paper to live money trading. However, even if that does happen, then there's ways to get around it, right? So this is why I want to put in this real money. We'll test it out. If it deviates from what's happening in paper trading, then what I'd like to do is I'd like to make there's this idea that I saw to trade options instead of placing a market order or a limit order. What it would do is it puts a limit order that's basically chasing a price. So let's say if I want to buy the option at $7, let's just say, right? Instead of putting out a market order and who knows where it gets filled at, or I put out a limit order and I don't know if it gets filled or not. What I would do is I'd put out a limit order that's adjusting every 10 seconds, right? So go at $6.50. If it doesn't get filled, $6.60. Doesn't fill, $6.70. If it doesn't fill, $6.80. And just keep going up by 10 cents or whatever amount until it gets filled, right? So I think that's one way to counter that if we see differences between paper trading and live money, right?
What about the mid price instead of the market?
You can do that, and that's another thing that I want to add in. LumiBot doesn't currently get bid and ask prices, so I'm going to add that feature in as well. It's not that difficult to add in, so we'll add that in pretty quickly. But even the mid price, though, there's a chance you don't get filled, right? And if you're putting on a butterfly or a condor and one of your legs doesn't get filled, you can get burned very badly, right? So you put in the mid price that you still run that risk. Like, what if it doesn't get filled, right? But
Actually, if you have if you have the program that put all the four leg together, either it fill all four or it don't.
exactly.
So you cannot be just fill with two or three. And out of the four, there's a low price, there's a mid price, there's a market. So and we trade mid price, and it fill most of the time.
Yeah, that's a feature that, like I said, I'm gonna add in on like Monday or Tuesday of next week. That is very high on my priority list. Ali, I don't think he's here today, but he wrote me a very long email describing his concerns about this. And that's exactly what he's saying. It's like, what if one gets filled and not another one? But you could fix that by putting on a multi-leg order, where they all need to get filled or none of them get filled. Right. So we will be adding that feature into LubiBot early next week. And the way that we're going to do is it's going to be basically when you submit an order, you'll submit multiple orders and then put a flag on it saying, this is a multi-leg order, true, and then it'll submit it as such to Tradier. Cool. So that's this algorithm. That's a butterfly condor. Obviously the returns are quite astounding. I don't know about you guys, but if I double my money every year, like you do the math of that, it's like 1,300% in 4 years. That is absolutely insane. What's very interesting about this algorithm is not only the fact that it makes all this money, but also it has a very low max drawdown. Actually, it has a lower drawdown than the stock market did over this time period. The stock market went into a bear market, lost 33%. For those of you who don't know what max drawdown is, it's from the very top to the very bottom. So here, it probably peaked out and then dropped here. This might be the max drawdown, or maybe from here to here. It's kind of hard to tell because we're not looking at an exponential graph. Actually, here's a log scaled one. So this seems like it was a pretty big drawdown. Maybe this was the biggest one. Either way, what is the biggest thing from the very top to the very bottom? That's the max drawdown. The stock market had 33%. We had 32. So lower drawdowns and shorter drawdowns too, by the way. For the stock market, the drawdown lasted 745 days. So over 2 years. That's I think the bear market that just happened. Very long. Whereas this strategy only lasts for 274 days. So lower drawdown, lasting for a much shorter time period, and significantly higher returns. This to me sounds like a fantastic algorithm, right? Cool. So that's our butterfly condor strategy. So I guess I'll first of all open it up to you guys if you have any questions around this, if you need to understand it a bit better. And then second of all, and the more important question is, how do we make this thing better? What ideas do you guys have? What do you want to try out? I could tell you one idea that I had is we built that, and actually Cody, you and we had a conversation about this algorithm back in the day. This guy that had the YouTube video, and maybe more than one of you guys came to us because of his video. But this one, the news trading one, this dude, right? He had like this AI bot that he built and basically showed that he got like crazy results. Kind of BS, to be honest with you. Like his results were not realistic. Like no broker would allow you to trade like that. But I think he had a very good idea in that you could actually take the sentiment of the market and determine whether you want to trade or not that day. So I think we could actually take the mechanism from this bot and use it inside of the butterfly condor and say, well, there's a bunch of bad news coming out right now. Let's just avoid it, right? Because the thing is that this butterfly condor strategy, it loses money when things get too extreme, either too good or too bad, right? If we're in extreme euphoria and it's shooting up very quickly, it will lose money. And same thing if we're in some bear market condition and everything's going really, really badly. Actually, not even a bear market, like a scare, like people are freaking out and the market's moving a lot. That's when it'll get affected. Actually, it made quite a bit of money during the bear market. You could see here. That's the other really interesting thing, is the stock market was down, but this thing made a lot of money during that time period. All right. So it doesn't matter whether the market's going up or down. It matters whether the market's moving a lot, right? So like on a day where the market moves like 2-3% in a day, that won't do very well, right? But if we're calm, whether it went up 0.5% or down 0.5%, I don't care. I'm going to make money in either situation, right? So I think paying attention to news, I think would be one really interesting thing to look at. You know, either extreme sentiments, I don't want to be involved, right? That's kind of what I'm thinking. At least one thing we could try. But what other ideas do you guys have? What would you guys like to test out?
I mean, if we're going off of that information, right? I think at that point, maybe we take a look at historical movement within like the time frame of our trading, maybe plus or minus a day, and say, is it safe rather than relying on ML sentiment? What I think could be an interesting thing, and a thing I've thought about for a bit here, is trying to use the ML sentiment to identify what are, popular things, what are growing more reasonably, right? So maybe hitting it with a handful of stocks to say what is the sentiment, and then check what the movement on that is, and go from there to try to diversify against more than just one ticker symbol, right?
Okay, that actually sounds like a really good idea. Absolutely. We can definitely do this with more than one ticker. Right now, I think this is on the SPY. We could do it on the Qs. We could do it on Apple, Tesla. We could do it on a bunch of different stocks. Theoretically, stocks that don't move a lot should work better, right? So indexes or I don't know, just tickers that just don't move very often, I think should pay off better, I think. Because there's a trade-off, right? It's like if it doesn't move, then we get paid. But also if it's something that doesn't move very often, then you don't get paid very much, right? Because you're not going to collect much premium for something that's like very, very stable, right? But I think that's an interesting idea. I think in general, using different tickers, right? We could try it on different tickers in general. Maybe we try, instead of SPY, we try the Qs, we try a few different ones and kind of just see what each one looks like. I think last week we tried the Qs, QQQ, right? And it didn't have as good of a result as SPY, but my intuition, I think that's either because the Qs move a lot more. Oh, that's the Apple thing. It actually showed the little thing. Either because the Qs move a lot more, or maybe it's just not calibrated correctly towards a Q. So maybe there's different calibrations per symbol, or maybe some symbols do better than others. But I think that'd be an interesting idea in general. Let's try this with different symbols and see how they all stack up. I like that idea.
Might I make a quick suggestion? Robert, if you have the curve that ideally fits the butterfly condor model, so this is what we want. This curve we would be banging. Then we take that curve and then we search all curves for that curve and get the ones that are performing like that curve.
So basically look for the symbols that are performing the way that we want it to perform.
Yeah, so if we did a search of all curves and then overlaid the curve we want on top of those, or asked it simply in natural language, find this curve in all the curves in this data set. Return the results here for me to review, and then we can continue to organize the data that way and make a selection. Okay. Or execute on finding X curve.
Right. Okay. Yeah, that definitely sounds interesting. And that's building on Cody's idea, right? So we can use multiple tickers, but furthermore, which ticker do we use? We can do that based off of which one is performing the way that we want it to. right?
Right. We'd search all tickers and we'd run it, find this ticker shape, the one that model that we want, the curve we want. Find this curve on these tickers for this time period.
I like the idea. I think that's a good idea. Cool. Okay. These seem like very good things to try out. Any other ideas that you guys want to try out?
Just a thought on when you add real money, you might want to add an amount that equals the max drawdown. So for a $25,000 pattern day trading, that would be about 33,000.
Yes. Yeah. Well, that's why I want to put in 30K, not 25. Yeah, exactly. Maybe we'll transfer 33, whatever. Yeah, I guess you're right because what is if the max loss was and the thing is that like you're probably not going to hit max loss immediately. I guess it's
Right.
theoretically possible, but if it's 33%, right? 33,000 times point was that 6.7. That's 22. So we want to actually 25,000 divided by 0.67. Theoretically, we should put in 37,000.
Oh, you're right. I did it the other way. Yeah, you're
Yeah.
right.
Okay. Yeah, whatever. Sure. I put in
There's
30.
a thought.
Yeah. I can definitely move that over. Maybe I'll move over like a 35 instead of 30. That's fine by me. Thanks, Esan. I think that makes a lot of sense.
Sure. And just a thought that if you're updating Lumibot to do, strategy trades, then you would need to kind of rewrite whatever we do tonight after that, right?
Yeah, it would be very minor adjustment, actually.
Okay. Good.
So essentially, and yes, well, once that feature's there, we could do that. But it's very, very simple. So basically, we would take the spot where we actually place the trades. So where is that? So let's search for submit order. Yeah, there you go. Here's where we put on the initial order, for example. Instead of doing individual submit orders, we'd go self.submit orders. We pass in all the orders, right? And then we put in a flag which doesn't exist right now, but would be something like, what is the name of it again? Multi-leg is multi-leg equals true. Will be something like that. Right.
Okay. Yeah. So you replace those 4 lines with 1 line of code and you're done.
Right. In some ways, actually simplifies it. Yeah.
Cool.
Yeah. That's what we're planning to build. Assuming nothing goes wrong, that should work just fine. And I spoke with one of the other developers on Lumibot today, and he seems to think that this is very plausible. He knows this part of the API better than I do, and he's like, why don't you just do this? It'll take like a day to build. Okay, sure. But yeah, that's the idea. And so it wouldn't be a big modification. It'd actually be very easy to modify this algorithm to do that.
Nice.
Yeah. Cool.
And I assume that you can make it take only 2 or 3 trades per week, also for under 25K.
Yeah, what I think is an easy way to do that would be just change the days of the week that it trades. Right here, it trades Monday, Tuesday, Wednesday, Thursday, Friday. Instead, maybe just make it trade, Monday and Friday, right? Theoretically, that means there'd be butterfly put on and then off. That's 1. And then if it needs an adjustment, that'd be 2 maximum per day, right? You're going to have a maximum 2 trades per day. And then if you're trading 2 times a week, then you'd have 4 maximum, right? We could even put in some logic that says that if you had to do an adjustment, you could change that. We could add that in if you guys want. That's not a very difficult thing to change. But yeah, for those of you that want to use less than 25K, we can make those adjustments. I think after Monday, give me Monday, maybe even Tuesday. I'll need to work on this. Then we can figure that out. Cool. Let me ask Kevin, do you have any suggestions as well? This is your original idea. Is there anything that you would want to modify about this, or have you been playing around with this? What do you think?
Yeah, I've been talking to other traders about this specifically, and when you have income trading like this, whether it's an iron condor or a butterfly trade, the one phenomena that does influence option pricing and option risk and sentiment is a concept called volatility smile. So the volatility smile will affect option pricing, in particular for a butterfly, because there's two at the money options that you sell, and then there's two out of the money options that you buy. And when the volatility smile is more extreme, that affects the overall pricing and then the net pricing of the whole strategy. And the other thing it does is it makes the option go to max loss more quickly when the volatility smile is extreme. So I think one thing that might help us is to collect that data and find out for that particular day what is the volatility smile for that day. And if it's more on the extreme side, then perhaps we think of a different strategy. I've talked about other possible ways to play this and before. You can also, this is a credit spread. There's also ways to do butterflies with debit spreads. And I also talked about Batman trades as well. And one of the things that the volatility smile does provide is market sentiment. So when the volatility smile is very extreme, what that means is the volatility of out of the money options is higher than at the money options. So there's a strong tendency or feeling in the market that the price movement is going to be extreme, especially when the price moves from at the money to out of the money. So basically, the option pricing reflects the fact that the market sentiment is that the price will not be stable, and that is reflected in the option pricing itself. So right now, what we do is we blindly, without looking at too much data from the market, we don't look at too much data from the market. We look at some things that you called out before, but the other thing that we don't look at is the volatility smile. And that is related to options at different strike prices, whether it's at the money or in the money or out of the money. And there's a nice graphic for that. You're getting it. Yeah, that's it. Right there, that one. So this is on Investopedia. So a lot of the times, depending on what the market is, the flatness of this curve changes quite a bit. And it's called volatility smile because the center point is at the money. That was that blue center point there in the previous graphic. Yeah, so that is a butterfly trade. You get two, and an iron butterfly specifically, you get a at the money put and an at the money call, and you sell both of them. That's basically where you're getting the overall credit. But then you, as insurance, you sell out of the money calls and puts out on the wings there. And if, for example, you can imagine you have to buy those, right? So if this curve is very flat, then the maximum credit you're getting will be would be greater. But now, if you get this smile, So recall that the out of the money options, you have to pay for those. So if that implied volatility increases, that means the option pricing is also increasing. So the overall net for the position is going to be less. But it also implies that the implied volatility of the market believes that the price is not going to stay at the money. It's going to move to either, lower or higher. And that influences not only the pricing, but also the expected move. And right now, we're only the expected move that we're using to calculate. What we use to calculate our expected move is at the money call implied volatility, which is depending on the smile, the actual expected move could be much greater because of the skewness of this curve that we see here, volatility skew versus versus volatility smile. So like the other graphic, if you look at the graphic on the top right, there's two images, one with a smile and one with a smirk. The smirk basically means that the market thinks that there's a bias for that particular option price. The implied volatility in the smirk, for example, if you look to the left, it basically has a bias where it believes that the option strike will move lower because there's higher implied volatility there.
That's actually very interesting. I've heard of this volatility smile. I never knew about the details like that. That actually makes a lot of sense.
It affects the option pricing, and it also affects, the probability of, how the market will move. So we can use it for two things. One is use it as a screen. If, for example, if the volatility smile is too extreme, then we can either put the trade on or do a variant of the trade, which I don't know what that will look like. But as I mentioned, it could be, we could do not at the money butterfly, but we could do out of the money butterflies, for example. That's one possible scenario. The other possible scenario is we have to recalculate the expected move. And that's another possible thing to do. So net of everything I've just said is gather another parameter from the option pricing and look at the volatility smile. Take that information, modify the trade in some way so that we can get either better pricing or enhance the possibility for pinning the trade within the 10. All those details, I don't have it worked out yet. I'm still researching it, to be honest, but I think that this could be a critical parameter for us. That at least like at a bare minimum to collect the parameter so that we can look at that and correlate that to the actual return.
Okay, that sounds very interesting. Since you mentioned that, actually, one more thing I'm going to put on here. So notice I started putting this improvement ideas here. One that we didn't finish last week was pinning the trade. We didn't finish that last week, right? Because I think we started working on it, but we didn't actually.
Yeah, that was in the event that the trade will pin, then we had put a take profit target of like 25%, I believe. But if it's a candidate for pinning, then we probably want to implement a different strategy where we take profit with a trailing stop.
Yeah.
So when it does in fact pin, you can get profits well in excess of 25%, much greater.
Yeah, that makes a lot of sense. I think we should actually start working on that first because that's something that we started doing last week and we didn't get a chance to finish that, as far as I remember.
Yeah.
I don't think we finished that, right? Yeah, so I think
yeah.
that would be a good first step because we already started working on that, right? I'm also going to put in here trading multiple symbols, right? Is what you get, Cody and Will, what you guys are talking about. Create multiple symbols.
Yeah, and when who was it, Cody or Will? I'm not sure who was speaking. I apologize if I got it wrong. Was it Will or was it Cody?
I mean,
Speaking on what? But speaking
About the symbols, about this different symbols.
yeah, I was saying so yeah, you tokenize each symbol. Every single possible symbol you get gets a token. Then each token gets a weighted average or a variance based on its performance, meaning this one is performing really well. Then you invest in that one and you can go in and then follow that up like with what was said with certain parameters before the execute, including that take with trailing stocks. I mean, that stop, because that's where you can really rip, right? You go on, you find these coins that are just going up crazy one day and you're in with a trailing stop. Of course, you get stopped out, but guess you can come back in. And then
Yeah.
you just don't want to get tackled by a micro trader that identifies that.
Yeah. What I was thinking about when you mentioned that is there might be different instruments that have more or less volatility smile. For example, a flat volatility smile is very conducive to higher profits with butterfly and iron condor trades. With a volatility smile with a lot of skew to it, is not commensurate with good profits on income trading. So if you can find instruments that have different volatility smile and you can switch from one to the other, that would be very helpful. Like for example, RUT is the Russell 2000, and that skew might be different than say QQQ or even SPY or SPX. The skew volatility smile does depend on the instrument that you're trading, the underlying, quite a bit.
Yeah, definitely. I think that'd be very interesting. I think Cody was the one who originally brought up the idea of trading different symbols, and then Will chimed in to take that to the next step. I think, Will, what you suggested was using LLMs to basically figure out which one we want to be trading.
Yeah, we
All
tokenize each
depends on
one.
Yeah.
Oh, sorry, go ahead.
No, please, after you. Sorry.
Oh, I was just saying that the reason why I think that's a very novel and very, very I think a potentially very profitable idea is that with any, trading any of these instruments, we have to react to what the market is giving us. So if as the market changes, we have to change our methodology and tune our models to exploit the model, its particular behaviors that might be there. Like low volatility environments are excellent for option trading. Even down markets are good for moderately down markets are good for option trading, for example. When the market is ripping, then these strategies don't fare as well. This option strategy that we're doing here with the butterfly, for example, may not do as well, but it can do well with modifications. So I really like the idea of modifying your strategy based on what the market is giving to you, because it's definitely a beast that you have to harness its potential energies by adapting your strategy.
Nice. That makes a lot of sense. Okay, so we got a couple ideas here. So we got the volatility smile. I think that's actually not too hard to do. Pinning the trade, I think we should finish that because we were working on that last week. Sentiment analysis, I think is pretty easy. Trading multiple symbols. I think we should try just trading individual symbols at first, just seeing kind of how they work individually before we jump into multiple. That's my thoughts. I don't know if you guys agree with that or not. We could try this with, actually, why don't we even start that right now? Idle holding symbol. Why don't we do this? I'll run a back test on the Qs. If you guys can give me a few different symbols that you want to try. Options, butterfly, condor, main, dot pi. We'll try on the Qs. We did it last time. Let's do that again. And then could run another one. What's another symbol that you think might work well? Just to like give a few a try, just so we can kind of see what's going on and how they all react. You said the Russell's another one, right?
NVIDIA.
NVIDIA. I don't think NVIDIA would be a good one, to be honest. We could try it if you want. I think it's the opposite of what we're looking for. NVIDIA.
Yeah, as a reference point of something that's like radical. I just think as a base reference for something that wouldn't work. Or
Yeah.
at least something that could be modeled. Because when we talk about modifying strategies, that the reason it came up is, yeah, that one would be volatile, and we know it's going up. But then I think under modifying strategies, to summate that would be, we would look at all the strategies that could be deployed, and whichever strategy would be most successful based on current market conditions would be deployed, or they would be deployed on their weighted average.
Okay. So what do we think could be something that's like a more calm type stock or index?
Try American Airlines
American Airlines?
or US Steel. Yeah, something like that.
American Airlines, symbol, let's see.
AA. I think
Nice.
it's AA.
Yeah.
Yeah.
Anonymous. Not what
Right.
we're thinking about. AA stock.
A stable coin would be amazing, like Tether,
Well, this
because
is
it's pinned to
for
the US
options on the
dollar.
stock market. This is not for crypto. Right?
ETF, could there be the ETF on the stable coins?
Well, that's just the US dollar, right? Like, I mean, I don't think there's any ETFs on stable coins, but if you think about it, that doesn't really make sense because that's just literally just the US dollar, right? Because the only reason why stable coins make sense is because they're in the crypto world, mimicking what the US dollar does. But I get where you're getting at. I think that makes a lot of sense.
Yeah, coming back with something stable.
Yeah.
Yeah, I think just to put the framework for this type of strategy, there are different types of markets, different type of instruments. One of them, for example, a momentum instrument might be something like NVIDIA or even Coin, for example. This Coinbase is definitely in a momentum regime where you want the underlying to move. And there are option strategies for momentum strategies that that one can use that minimize the amount of money that you have to put in, amount of capital you have to commit to the trade. And there are momentum strategies for that. The other ones that I might mention is range bound strategies like swing trades. These option income strategies work really well for range bound underlying stocks. Like range bound might be an example of that is, for example, the RUT, the Russell 2000, typically tends to be range bound. And another strategy that works really well is mean reverting strategies. Like, for example, mean reverting strategy, an example might be, some of the currencies, for example, commodities do really well with mean reverting strategies.
Oh, that's interesting, actually. Like gold or silver. That actually sounds really cool. Let's try
Yeah,
that.
commodity strategies are quite good for this type of thing because they mean revert quite a bit, or they are in range bound as well. So I think that for this, we probably have to, your typical momentum stock or currency, whatever it is, may not fit as well, is what I was trying to say.
Yeah, like something that's trending. Like Nvidia is like the complete opposite of what we'd want to do because it's shooting up like crazy. Coinbase, same thing. Any of these things are shooting. Maybe that's why the Qs didn't work so well. Gold sounds very interesting. IWM, that's the Russell. We could do that too.
Yeah, right, Russell, that's right. That's the ETF, right, of
Yeah, it's
the
ETF.
Russell, yeah.
Yeah, because we can't get index data, which is a little annoying from Polygon. Hopefully they'll add that soon.
I mean, just as a general strategy, one can imagine a playbook of these things that are, you might have different bots that do things like exploit range bound underlyings or mean reversion type bots. And then you might have momentum bots that actually, I think it was mentioned earlier, looking at different coins, for example, the coins that are performing best from, scraping some website and then, having a whole corral of different Coinbase momentum instruments, and that would be like a momentum bot of some sort. And the great thing about all that is, for the most part, the momentum strategies are not correlated to some of these range bound or mean reverting strategies. They're negatively correlated. So that's the ultimate playbook, is to have bots that look at different aspects of the market. And that's why I love the idea that Will was talking about, having different bots have different functions, and then having a master-slave relationship where another AI was coordinating all the bots depending on what the market was doing. Whether it's and I love that idea, having the different agents.
Yeah, just to expand on it, I mean, we can't use master and slave anymore. We can't use those words.
Oh,
They're
sorry,
really
I'm older,
particularly
so
removed from
I'm too old.
current dialogue. I accidentally piss people off all the time. I'm like, oh my God, I'm so sorry to not, because we have new generations, we're X, whatever. But that being said, in reference to that, you would structure this exactly like you would any organization. You have a CEO, you have a CTO, and those all have predefined functions as in that agent architecture, and they self-communicate. And that's how we build a self-learning system, is we have these different agents communicating. But to simplify and apply this here, is we go through these. We have our momentum regime, we have our range bound, we have our mean reverting. Then we look at really stable things: gold, bonds, T-bills, cash. I mean savings, savings accounts. That's pretty stable, like 1.9% all day, stable. So all of these are performing. And then what we do is we put a weighted average based on their performance in a given time period.
Right.
And they all come back to the management level, or managers, and we have a project manager, our tech guys, making sure. And we can always add in a layer, a QA layer, quality assurance layer, and an HR layer, just to run some stuff on it. And it's like, is this cool? We're not going to accidentally do something we're not. And we can flex with that. But if we're in a playground, we can let this thing rip.
Yeah. Yeah, I love that idea. That's a future build, Robert.
Yeah,
We're
that
gonna
definitely
give you
sounds
so much bot fodder that it's gonna blow your mind.
It definitely sounds very interesting. Here's one, Duke Energy Corp. We could try doing this.
Right. Yeah, as long as it has options. Everything had, in this universe, it should have options. Yeah.
Yeah, this is supposedly one of the biggest energy companies in the US. It's $72 billion market cap. I'm assuming it has options on it. You know what I mean?
Yeah, as long as it's liquid, the options are liquid. Because slippage is very, for example, I was a victim of slippage today. I was trading manually this iron butterfly options just today. At about 2 o'clock, I had a $400 profit on my iron butterfly. But then, I'm at work and I didn't watch it. And then about 3 o'clock or 3:15, the trade looked like it was going to pin, and I was really getting excited. But then I got distracted at work, and it became unpinned, and I couldn't get out of the trade. So I had a $400 winner, and long story short, it became a loser. It was like only $100, but the point was because of slippage, I couldn't get out of the trade. And it's a real thing, and slippage sucks.
Yeah, especially with options, it's a real problem. Were you trading what, the SPY, SPX? Where were you trading?
I was doing the SPY because I was following the Q from you have Lumibot made a suggestion. It's trading paper trading right now.
Mhm.
And I took that as my starting trade.
Oh, so you basically just followed the trading signals here?
Yes, yes.
Oh, amazing.
Yes.
Fantastic. Yeah. There's
But then I let it go too long.
Yeah.
I don't know, did it have a profit today?
Let's see. It lost $200.
Okay, I lost money because at about 3:15, between 3:15 and 3:30, it was very close to being pinned. And then I guess some algo program kicked in.
At
And
the end of the day, it just dropped.
yes,
Yeah.
yes. Yeah, and that
Yeah, Kevin,
Yeah.
I've been having fun with that strategy. Today I made a mistake. I sold supposed to be 52.20, but I made a mistake. I sold at the 52, and then it cost me only $10. So the end of the day, it dropped and almost pinned. So I make $120 out of $10.
Oh, that's great.
So that one. So with the strategies that you talk, I mean, the trading just one contract every day, make a little money every day in 2 weeks.
That's good. Yeah.
Yeah, thank you.
That's good practice. It's good practice. And then once you get more, you get more experience with it, and you can prove to yourself that you understand the conditions at which it is profitable, then you can commit more capital. But you have to build up your confidence, right?
Yeah,
That's what this is all about. This back testing that Robert does and these programs and this live trading, it's all methods to improve and our confidence.
Absolutely. Definitely
Thank
agree
you.
with that. Cool. Okay. So I got that part running. So this whole idea of trading multiple symbols, we did modify the algorithm to actually trade multiple symbols at a time, but I think a step towards that is just trying out different symbols. So we're trying all that out now. So we're trying out a bunch. We already did SPY. We're trying QQQ. We're trying AAL, which is American Airlines. We're trying Gold, GLD. We're trying IWM, which is the Russell. And then we're trying DUK, which is this big energy company in the US, apparently. Right. So we'll see how those all turn out. I think that will help us go in this direction of trading multiple symbols. At least we'll trade them all individually first, see how those work out, and then we can figure out how this work together as a portfolio and how do we determine each one. Once we get these results, I think it would help us with determining that. All right, so we got that running.
There's also, as another idea, another commodity that might be useful is oil. There's a number of symbols for that as well. ETFs, oil.
You think an oil company would be better, or just like the oil ETF,
just the oil itself. I mean, there are a lot of drillers, for example.
So here's a couple.
USO is the oil fund, right?
Bloomberg crude oil. That's the ultra though. This would move a lot. Invesco DBO. I've actually seen this one before. It's DBO.
USO is also a good. It's ETF for the crude oil.
Yeah, USO.
Yeah.
Yeah, this doesn't really move too much. Has some pretty big movements here. Like there's some pretty wacky things. We'd probably want to diversify that out because this would blow up a trade. But luckily the butterfly, I mean, you lose for a few days in a row, but it's not going to blow up your account, right? But this would be quite painful going through this experience. Although I'd expect implied volatility to spike like crazy during this time period.
Yeah, I mean that was what 2008. That was during the financial crisis.
Yeah, financial crisis, big
Yeah.
drop, not surprising. Another one, 2014, which I don't know what the heck that was. I'm assuming some sort of war or something. Or why would it drop so heavy?
I'm drawing a blank. I'm sorry.
Let's see, that's DBO. What if we compare this to USO? How does that compare? Oil fund. Oh, they're like mirrors of each other. One of them is moving a lot more though. DBO seems to be a lot less volatile.
Oh, that would be good as long as it has options. Yeah.
Well, let's see. What is total assets? DBO is 249. Oh my God. USO is way bigger. I would think the options are way more liquid on USO. So why don't we try that then? Let's do USO. USO. There you go. Okay, so we got a bunch of these symbols being tested out. Let's see how those work. Okay, all right. So we got those running. It will take a little bit of time for us to get the back testing results here. It looks like most of them are around 2 hours. So they'll take a bit of time before we get a result. Luckily, again, I got this faster computer so we could actually run all of them at once. In the meantime, while those are going, why don't we work on this pinning the trade, right? We started working on that. That was down here. This is the take profit, right? Now we need to introduce like this trailing stop mechanism, right? Which is, let me see if we have take profit, trailing stop. Where's it all mentioned? Yeah, there you go. So I have to figure out how this all work, if this is all working properly. Take profit, trailing stop. Another mention of it here. I'm just going to put breakpoints wherever it's mentioned. Okay. So why don't we run that? I'm going to run that in debug mode, but can you guys give me a quick second? I'm going to use the bathroom. Be right back.
Any other option strategies to put into a weighted model besides range bound, mean reverting, momentum regime? You get like three more.
All right. Hey guys, thanks for waiting. So we got these things running. Just curious to see how they're doing so far. So one on SPY is up by a lot. We're at 120K already. That's clearly doing very well, but I guess we've already ran this before, so it's expected that it's up by that much. For those of you guys that are new here, this thing assumes they start off with 35,000, and then you can watch the as the progress meter moves, you can actually watch the value of your portfolio go up or down. So this one turned 35,000 to 116,000 so far. It's about halfway through, so about 2 years. Pretty nice return, about triple in 2 years. See how this one's doing. The Qs also up, a little less impressive, but going the right direction, so it's good. American Airlines so far not doing so hot. Lost money so far, 13% through. Gold seems to be doing pretty well. Well, up a little bit, not up a ton, but 13% through, up $2,000, going the right direction. Ooh, this one looks good. IWM, the Russell, 43,000. That's a good start for 12%. Here we have the energy company, whatever that was called again, Duke Energy or whatever it is, up a little bit, okay. And then we have USO oil, which so far is down by a little bit. That's a little status update there. Okay, let's take a look at this pin. All right, let's see if we can get this thing to work. I switched it back to SPY. Let me run this in debug mode and let's see how this works again, because I don't remember all the details of it. Let me see, run this here. Okay, from what I remember, it takes some time before it actually hits this. We let it run for a bit. I could actually stop this one. We don't really need to rerun this. It's kind of taking up processing time. Okay, so here we reset. We don't need to worry about that. So basically, we're waiting until the portfolio value crosses the take profit time period. And when it does that, assuming it's take profit trailing stop. Oh, actually, I need to set this. Let me redo this. What would we want the trailing stop to be? Like 10%, 20%? What are you thinking, Kevin?
Oh, sorry. My wife called. She's trying to travel from Pennsylvania up to New York. She's fallen asleep at the wheel, so
Oh, yikes.
so she's tired. So I was just talking to her a little bit. I apologize. I missed
That's a long drive, Pennsylvania. I've done that before, actually.
I'm sorry, what were you saying? What were you asking me?
I was saying, what do you think the take profit, the trailing stop should be? We're doing the trailing stop on the actual portfolio value. So
Yeah.
how much would we want the trailing stop to be? But like, I guess 10%, 5%. Because since it's on the entire value of the portfolio, and we're putting 25% of our money into it. So presumably we want to multiply those two together. So if the position drops by how much would this trailing stop be? Like have you tested this at all? Like what are you thinking there for pinning for the trailing stop?
Yeah. I've seen this done so many different ways, to be perfectly frank and honest with you. One way that I think that works really well. Excuse me, I had to take a drink. one way that works really well is it's based upon your portfolio strategy for that particular trade type. So like we said, our max drawdown, I think we said something, it was very similar to the market, which was like 28%. So typically what one would do is have your account size be some multiple of your max drawdown, or a percent of your max drawdown. And that would determine your portfolio size, for example. And then you would take some fraction of your portfolio size as your position for any particular options trade. Now, as far as the trailing stop, we had done a take profit at 25%. A trailing stop in this case would be at that tip. If you are up 25%, you don't want to give back more than 10% of that. I mean, that's the way I would do it myself. So you at most would have a 15% take profit if you had been in the regime of originally at 25%, and then if you gave back 10% of that, you still have profit. So a trailing stop at 10% would be something I would do.
Okay, so the 10% trailing.
Yeah.
You're saying also adjust your take profit as well? I guess you would probably want to do that then. Because
Well,
if you're doing a trailing, then maybe we want to lower the take profit as well. Because that's when it originally starts the trailing. Right? Like the trailing start until take profit hits 20. So maybe we want to lower that as well. What do you think?
Yeah, in some cases you want to allow the trade to breathe. For example, in the first 10 or 20%, there's a lot of give and take. But if you are truly at a pinning potential, you really want to tighten the noose. You don't want to give back too much. So I look at it into two different regimes, if you will. A breathing regime that's between 0 to 20%, and then we're narrowing the parameters so we don't give back too much after 20%. Does that make any sense?
Yeah, so take profit of 20%. When we cross that, then that's when we implement the trailing stop.
Yeah.
That's basically what we have right now.
Yeah. I mean, in a pinning environment, if you are truly are pinning, then don't give back too much. You don't give it too much of a breathing room, if you will, because at that point you don't want to give back what you've already won. You want to take it and move forward with it.
Okay, so I think it's a good setup. So take profit of 20. Once we cross that 20, then we put on a trailing stop of 10.
Yeah.
Okay.
I mean, obviously, this is the first attempt. We can change this, of course.
Yeah, for sure. Definitely.
Just, I mean, that's the beauty of what we're doing here. It's actually so wonderful to be able to just try it out and then modify the parameters and see if that works better, and let the data speak. I love that. That's awesome.
Absolutely. Definitely. I couldn't agree more. Okay, cool. So we're running that right now. We're waiting for this 20% take profit to get hit. I'm thinking maybe we even lower that a bit just to kind of see if the mechanism works. Why don't I'll do this. I'll set the take profit for now to be something like 5% or whatever, or something even lower, like a 2%, just to see if the code works. And then we can set it to what we actually want to be.
Yeah, sure. Absolutely.
I'll do that. Then this will happen more often. We'll be able to test it quicker.
Yeah. I mean, that will happen pretty quick. Right.
Yeah. Also, sorry, Frank, you asked a question here. You said, is this for Tradier or Alpaca? And the question, the answer to that question is, Frank, we are currently trading this with Tradier because it's the only broker that allows us to trade options in the cloud. Right. So we're using this with Tradier. Alpaca, however, has recently introduced options trading. They're doing paper trading for it now. They haven't released it for live trading yet, but when they do, we're going to add Alpaca as well, so you could use that too. But yeah, we're using Tradier just because they're the only broker currently that we could run in the cloud that has options trading. Yeah. Okay, awesome. All right, no problem, Frank. Okay, so there's a portfolio value. Okay, so we hit that take profit. Perfect. It hit faster now. Now we're saying, okay, the trailing stop is 10%. Perfect. So now that goes, and we say, okay, trailing stop is not none. Okay, if portfolio value falls below that, right, then we adjust. Otherwise, we adjust up. So this seems like the portfolio value went up. Take profit trailing stop was at 31,000. And now it was at 31,658. And now I think it will adjust up. 31,701. Cool. Okay. So it seems to be working properly so far. But now we're going here. Take profit trailing stop is none. Okay, good. That's working properly. It's not hitting it twice. Now it's adjusting again. The take profit was 701. Now we let it go to 757. Perfect. Okay, it seems to be working properly so far. Adjusts up, adjusts up. Let it keep adjusting up. Seems like this thing is, yeah, keeps going up. Perfect. It's doing exactly what we want it to do. It's 32. Now it goes 32,003. 3190. This is not correct, I don't think. No, this is not right. Because now we're saying if portfolio value is greater than trailing portfolio value, take profit portfolio value. But that's not what it should be. It should be this portfolio value. We'll go like this. We'll go, because this is going to be true in many, many cases, and it's just going to adjust down. It's not going to do what it's supposed to do. It should only be if this new trailing stop thing goes higher. So we need to do this. We'll go potential new trailing stop equals that. And then now we check if the potential new trailing stop is greater than the current, I shall say, take profit, potential new take profit. The potential new take profit is greater than the current take profit. Then we adjust it. So that's a little bug fix there. So let's see if this works properly now. It seems interesting though. I feel like this could actually give it a really nice boost. I think another thing that would make this thing a lot more profitable is we just increase the percentage to trade from 25 to like 35. I think that alone will cost $100,000 or 100% a year. I think that one thing alone will do that for us. Well, let's test this out.
You're right.
Right? Like, I mean, just use more of your portfolio. That's it. Right? Like, if 25% of your portfolio generates 89% a year, 35% of your portfolio should make you more money. No? Like, that seems pretty straightforward to me.
Go ahead and use 50%.
Yeah, why not? Right?
Well, I think professional traders, they have different trade in their playbooks. They have like A trades, B trades, and C trades. And the way they characterize that is if An A trade is a trade that is like their bread and butter, that they have a high probability of high expectancy, high profit. And the reason why that's an important distinction is they load those trades up. They put more capital at risk for A trades versus B trades versus C trades. And where am I going with this is that, normal portfolio management would say, well, don't risk more than 1% of your portfolio on any one trade. But if you really truly want to maximize your potential profits, then you have to look at your portfolio and look at the probability of success, their pop, their expectancy, and you typically load up your A trades more than your Bs and Cs. So
Yeah,
I mean,
and where you will have to be careful too. Dave Drews and Ed Skoda published a study where they had looked at all the parameters of how much percent you use, and they came up with 25%. Just because if you're trading 50% of a deal like this, the drawdown will get you down to zero, and then you're out. So you have to watch out for that part of it.
well, that's true too. That's what there's a whole strategy towards portfolio management, and that's what Will was talking about, is having an agent handle portfolio management, and that could be reactive to the market itself. Like of your playbook, what strategies are winning in this particular market environment, and so that's something like an agent can maximize. Maybe the agent has a ability to maximize profits based upon your total portfolio and all the agents that are working different strategies. So
yeah, the agents would make it a dynamic adjustment rather than a static set of rules.
Yeah,
so that's
exactly.
Yeah, good.
Yeah, I like that. I really like that idea. So I think the AI might be able to see things that are happening in the market well before a human can. And at least in theory. We'll see if that actually works.
There's something messed up with logic here that I'm trying to figure out. Actually, I just realized we have take profit portfolio value, and then we have the take profit trailing stop. So this is the take profit trailing stop. So this is a potential new. So what is take profit portfolio value? I want to see what that is. Take profit trailing stop. Take profit.
Yeah, honestly, I'm a little confused, Robert. I know we have two different regimes that we get to, and I guess the terminology is confusing me a bit.
Yeah, I'm trying to sort this out right now. It says take profit portfolio value is where is that? That's when we put on the butterfly at the beginning. We'll get the portfolio value. And then we'll add the take profit move that we want, which is the 20%. So actually, this is not what we want to do. I don't know what we had here before. I had here before that if the portfolio value is greater than that, that's not really what we want. What we want is that if this new potential new trailing stop.
It's got to be greater than 20, our take profit of 20, right? Has to be greater than that.
Yeah, that happens at the beginning, and then after it crosses that 20, now it goes into trailing stop mode.
Yeah. Two different modes. Yep.
Yeah, exactly. So it's like up until 20, it behaves one way, and then when it crosses the 20, actually in this case 2, but whatever, I just modified it. Once it crosses that, then it becomes into this trailing stop mechanism, right? So actually I got this a little backwards here. So this is new potential new trailing stop. So this is bigger than the current trailing stop. Then we change the trailing stop to BINUS. Okay, I think this will work better. I was getting the two mixed up that I didn't realize we had these two things that we were paying attention to. This algorithm has definitely become quite complicated. There's a lot of moving parts in here. Okay, so Will posted trading agent, range bound assistant, range bound. Interesting.
Those are kind of placeholders, but I just wanted to show you the relationship between agent and assistant, and then how their roles can be defined and their tasks redefined. And then you can come back with a revised task list based on previous task lists. And that's how you get to the general thinking.
Okay, so have an agent and an assistant, price ranges, range bound, price mean deviation, momentum regime.
So I started to fill in our strategies. I mean, we put each agent would be a strategy like based on, we would based on range bound would be an agent, momentum regime would be an agent, mean reverting, and based on their performance, the project manager could then create and execute based on their or create and allocate a part of the investment capital into each performance based on how they're performing.
Yeah,
So we have one agent monitoring a bunch of other agents.
yeah. I mean, that's how, in some ways, that's how a prop house works, right? And it's all adaptive to the market.
It's very much what a prop trading house looks like.
I think we can build that in software.
Yeah, I know for a fact that a lot of the big hedge funds do this sort of thing. Like actually, I think I told you guys a story before about how I met this guy from Two Sigma. He wanted me to be a CTO back in the day, but eventually wasn't able to do it. But anyways, one of the biggest hedge funds in the world, Two Sigma, basically what they do is they run a bunch of algorithms all at the same time. They have just like a bunch of coders come up with a bunch of new trading algorithms. There's constantly coming up with different ideas. And then they'll run all these different ideas and they have the controller up at the top that's managing the risk, right? That's saying, well, maybe in this situation, this algorithm works better. In this situation, this algorithm works better. And let's reduce how much this one's getting because the risk is getting out of hand. And let's take a look at our general portfolio because one of them does really well when markets go up, another one does really well when markets go down. Let's put those two together to reduce our risk of our entire portfolio. So basically, it's like you have a controller up at the top, and then you have like a bunch of algorithms at the bottom that it's controlling, right? And it's kind of like saying how much allocation into each one, do we include it, do we not? Like that's how these big hedge funds work. I'm assuming Renaissance works the same way. I'm assuming a lot of these other quant hedge funds are doing the same sort of thing. So yeah, I think that'd be a very interesting way of doing this, definitely.
Absolutely. Yeah, on the same thing. And then the controller allocates the resource based on performance. And all of the agents are reporting to the controller, and all the agents have an assistant that's basically can go scrape all their data and come back to them. The agents can be instructed, update your task list based on this.
Exactly. Yeah. That to me sounds a lot like how Two Sigma works. And they manage how many billions of dollars, like this is one of the biggest hedge funds on earth, Two Sigma AUM, just out of curiosity. $60 billion as of 23. I know for a fact that's what these guys are doing. One of the biggest hedge funds in the world. So yeah, I think that makes a lot of sense. Yeah, because each individual agent would essentially be doing kind of just what it's supposed to do, right? Like it has its own strategy and just follows that strategy. That's it, right? And then you have another
exactly.
Yeah.
Each agent is a strategy, and then each agent has an assistant which does all of its homework. So it doesn't have to focus on doing the assist the research. But yes, each agent's strategy.
Why would it need an assistant? Why wouldn't the agent itself just do that homework?
It simplifies the process because while the agent's task is to focus on its strategy, it delegates the task of updating the information to an assistant, much like an organization. And all this comes through the neural network and human systems thinking approach. So by designing it this way, we're mimicking the corporate structure. The delegated tasks then are diversified and have focus points. Attention is everything. So the agent can focus exclusively on its task.
Okay, so the assistant is specialized, I guess a different way of putting it, like the assistant is specialized in getting data, whereas the agent itself is specialized in monitoring the strategy.
The algorithm itself, yes.
Right. Interesting. Okay. So this is like an entirely new concept. You're saying that this website, by the way, is the thing that Crew AI, that it enables you to do this sort of thing?
Yeah, and just looking at the landing page, it doesn't describe what it's doing. And there are really good tutorials and YouTube videos that show what Crew AI does. Crew IA is a GPT, uses chat 4. And what it does, it's specifically modeled. The LLM is trained to assist in building an agent to assistant relationship. So the code to create agents is produced by this GPT. So the code I produced in our chat was just a model framework, was produced by Crew AI, and my input said, hey, this is what I want to do with these strategies in so many words. But there's your command prompt. The command prompt wants to know, number one, who you are. I am, describe yourself, a senior software developer in AGI space. You are is the best teacher in developing agent to assistant models and using Python. Teach me how to build the Python code to create an agent that runs this particular algorithm, assign its assistant to do the research and scrape its data from these sources, build a prioritized task list on what we need to do to execute the next step.
This sounds very cool. I'd love to see like an example of this. Like if you build out something like this, I'd love to like see how this, and we could actually take that and implement it into like actually placing trades. I think that'd be a very
I'll get a video. Oh yeah, I'll be back and I'll post it in the chat, a YouTube video that describes the process of building the agent assistant relationship.
Okay. Yeah, cool. 100%. Definitely send it over. Sounds very interesting. I think personally, like I was watching a bunch of videos today, I think this is like the future of AI, right? Like ChatGPT is great because you could converse with it and it will give you answers to stuff. That's fantastic, right? But what if this thing could do multi-step processes for you and like actively stay engaged, right? Like that's the idea of an agent, right? It's like ChatGPT, but it's like constantly being re-engaged on a regular basis, right? Like, am I thinking about that correctly in the context of this? You're muted, Will. If you're there, I don't know. Either way, that's my understanding of what an agent is versus just a regular LLM. It's that it's active and it's like constantly doing things. So I'm running this thing here. For some reason, we're not ever hitting this trailing stop, which to me seems a bit odd. What I'm going to do is I'm going to lower this from 10% down to 1%, just to see if, is it a bug or is it just not hitting? I'm going to make that modification here. So I think the code is right, but it's hard to tell. There you go. There's a YouTube video.
On an iPhone, Copilot, your everyday AI companion. Tapping Create Images, then selecting a prompt. Create a logo for my fantasy football team featuring an animal wearing a helmet. Designer generates 4 variations. Tapping an image of a gray tabby kitten wearing a green jersey and helmet. Selecting Color Pop. Background colors fade, setting off the green uniform and the kitten's yellow eyes. Copilot, Microsoft.
Yeah, I don't think that's the right video. That's cool, but different video, I think. That definitely seemed cool though. There we go. We got this thing actually to hit the profit trailing stop. Okay. So 1% trailing stop is actually getting hit. So it doesn't seem like that happens very often. So that's kind of interesting. The 10% trailing stop, maybe 10% is too high because 10% is on the entire portfolio. I guess the take profit is also on the entire portfolio of 20%. So maybe those numbers are just very large. So I'm thinking.
Well, yeah,
It's not on the trade. It's on the whole portfolio value.
right. What I was thinking, honestly, was 10% on the trade.
Yeah, so which would mean 2.5% in this situation.
Oh, okay.
Right? Because if we're using 25% of the portfolio in this trade,
Yes.
we're doing 10% of that. So 25 times 10, right?
Yep. Yep. I was definitely thinking 10% of the trade itself. Yes. Yep.
Yeah. Okay. That makes more sense. Yeah. Because this trailing stop was never getting hit. I'm like, this is.
Well,
it's just
a pin trade doesn't happen very often either. But it does happen.
Here's that trailing stop getting hit. Okay. So this is looking better now. Okay, I think this code works properly. So we could set it to be this 20% take profit again, which is our original thing. And then we have that trailing stop of 2.5. So let me run that. We'll see how this pans out. Okay, so we've covered pinning the trade. We'll let this ride. We'll see what the results are with that. I feel like this would be a pretty good idea because basically when it crosses that take profit of 20, then if it falls 2%, 2.5% from there, so it really allows it to run quite high. I mean, like this thing, like if it pins, it could actually like really run, you know?
Right.
So I have a feeling what will happen here is we'll have almost exactly the same chart, except we'll have like every once in a while these big spikes.
Yeah.
That's what I
want positive spikes, not negative spikes.
Positive spikes, not negative spikes. Yeah, exactly. Yeah. Yeah. All right. Okay. So let's see what happens there. So we got a couple of these ideas running right now. These back tests, they take so long. I was actually having a conversation with one of the guys working on LumiBot. And he's going to be building out a thing that could potentially really speed up LumiBot backtests a lot, right? Because we're having a discussion on like what is the thing that slows it down, and it has a lot to do with like data frame manipulation. So we actually have some ideas that can like potentially really speed up LumiBot a lot. So maybe if things go according to plan, that these two guys that are working on it, maybe we can have like wildly faster back testing soon. Okay, so hit that trailing stop there. That's one time it got hit. That's with the 20% take profit and trailing stop. Some of these seem to be doing pretty well. USO is up to 53,000 now. We're 25% through. That's actually doing pretty well. Whereas it's Duke not doing so well. It's up, but not doing that great. IWM seems to be doing pretty well. Gold is doing actually very well. Look at this. It's 62,000 already at 30% through at 62,000.
Yeah,
I think you guys, I
I'll
think we
take
might be onto
that.
something.
I'll take sleepy assets. If I'm making money, I'm happy with that.
You know, what's great is gold actually behaves very differently than the stock market does.
Absolutely, yes.
You know, so if we have these two in a portfolio together, this could actually work really well.
Absolutely.
Like, we could have, I guess there's two different ways that we could do this, right? And Cody brought this up. Are you still here? By the way, I don't see you anymore. Oh, there you are, Cody.
Yeah, I'm still here.
Yeah, I see you. So I guess there's two different ways that we could approach your idea, right? Is we could have one way that we could do it is we could, which is what you brought up, is like, okay, let's do a scanner and see which one we should do, right? Should we do gold or should we do SPY or should we do whatever? We could have something like that that's picking which one we're investing in today. Or we could also have something that goes, let's just put 10% of our money into gold, 10% of our money into SPY, 10% of our money into something else. And now we're just diversified.
Yeah, that's a
Right?
great idea. I like it. They're not correlated to each other. You know, if one, fails, the other, can make up for it.
Right, exactly. You know, so theoretically, we could put a larger amount of money into the whole idea in general and would still keep our risk quite low.
Right. If they're not correlated, that's right.
Yeah.
Or at least they're negatively correlated, for example. That would be even better. That's the most desirable outcome.
I don't know if that's the case though. If they're negative, I would actually want them to be uncorrelated because if they're negatively correlated with a condor or with a butterfly, you would lose in both situations. Right? Because if one goes up by 2%, the other one goes down by 2%, we lose in both situations. Right? Whereas if they're uncorrelated, that's better.
Yeah, we were talking about this last time. If they're oh, can't even speak. I'm sorry. I'm drinking too much.
Word.
They're weakly correlated or even slightly negative. We were talking about that the other day, right?
Mm-hmm. Well, yes, in general for a portfolio like that. But in this case, it's not that we're owning those assets, though. We're doing a condor on those assets.
Yeah.
Right? Which is different because if you're doing a condor on those assets, if one goes up and the other one goes down, if they're perfectly negatively correlated, then we lose in both situations. Right? We want them to be uncorrelated so that if the stock market jumps, gold doesn't move. That would be ideal. Right?
Well, in this particular strategy, we do try to adapt for the implied volatility. So if we're expecting high volatility, we move our wings out further.
Yeah, but
try to adapt for that.
But in practice, I would think that if implied volatility goes up on gold, it would also go up on SPY. Or at least, or like, I mean, if they have some negative correlation to them, right? If they're uncorrelated, the ideal situation would be SPY moves a lot, gold doesn't move at all. So we lost money on SPY, but we made money on gold. Right. And then maybe gold moves the next day and SPY stays the same the next day. We make money on SPY, we lose money on gold. Right. Like we kind of want that sort of thing to happen, right? Where their implied volatilities are not correlated. Right. Not negative, not positive, just not correlated.
Yeah.
Right.
Well, I think the ideal portfolio might be something like, one of the index, maybe SPY, for example, oil, gold, and maybe crypto, if you can figure out a way to do that.
Yeah, crypto, I mean, we could use things like Coinbase as a proxy. I don't know if you could buy Bitcoin. I'm assuming there's Bitcoin options, right? There's a Bitcoin ETF. Why wouldn't there be options on it?
Yes. Right.
Right?
Yeah, Coinbase has an API. A lot of the trading platforms have APIs.
No, I don't mean APIs. I mean options.
Oh.
Options.
Right, but I just think in trading on their platform.
Oh, yeah, we're already connected to Coinbase. If you want to trade with Coinbase, that's very easy. Like all you have to do inside of here is at the very bottom, you just change the broker, right? So here we're using Tradier. Instead of using Tradier, you just put Coinbase and put your Coinbase credentials. It's actually very easy to make the switch.
It looks great. I sent through a compiler that changes for the back testing, that changes it into machine code. That might accelerate that quite a bit.
I'll back testing into machine.
Numba.
I've heard of Numba actually. I've heard of these guys recently. Yeah, this could potentially really speed things up actually. Yeah, because if you could vectorize this stuff. Yeah, because so where this is coming from for this speeding up of back tests is and the guys here know I recently got a new computer, right? I got like basically one of the best MacBooks you can get, right? Like M3 Max, like 48 gigs of RAM, like this thing is a beast, right? It's like one of the fastest computers you can get in the world right now, right? Like consumer, like retail based consumer computers, right? And I was expecting to see this huge difference between our backtesting results, right? I used to backtest the stuff. It took like 2-3 hours. I was expecting to backtest now like 4 times, 5 times faster. I did get a speed boost. It's something like twice as fast. But I was like, what the hell? Like, why is it only twice as fast? What I realized is that I could actually run multiple algorithms at a time. I could backtest 6 of them at once and my computer's fine. Like on my old computer, if I backtested 2 of these at once, my Zoom would shut down, right? But now I'm backtesting 6, 7 at a time, and they're all fine, right? So what that makes me think is that our backtesting, like LumiBot backtesting, is not optimized to use multiple cores, and it's not optimized to use GPUs, right? Which I think would really speed up what we're doing, right? So I think that there's probably some ways that we could speed up LumiBot backtesting to be like 10 times faster. That's what I think, right? Because right now, notice that we've been running this. It's been taken in 2 hours, whatever. You know, it's been an hour already. It's saying another hour and a half. It's taking a long time. I would imagine there's something that we can change in LumiBot to make this more parallel, and probably something along these lines like Numba. This sounds exactly like what might be helpful in this case. It's parallelize these things and get them to use GPUs and use like Python and C++ instead of like regular Python. I bet you we could speed this up significantly. And if we could imagine if we were doing this instead of backtest taking 2.5 hours, imagine it took 20 minutes, we could much faster come to a good conclusion. Right? That's kind of where this is coming from, you know? Okay, so we're running so far this whole thing with a take profit. So far it's doing quite well. $54,000, 12% into it. We're off to a very good start.
I'm sorry, Robert, which one is this?
This is the one where we're using the take profit trailing stop. And actually, I didn't include it in the name. I wonder if we should even restart it because it's not in the name. Let's see here. It says Durbit API. What is this worth, by the way, Durbit?
That's an exchange that trades crypto options. It's probably the oldest and biggest options crypto exchange. I
Okay.
don't believe it's available to US traders anymore, though it used to be.
The SEC just has to make everyone's life miserable, huh? Like, you know what? I wasn't much of a Trump supporter back in the day, but maybe when he comes into power, if he does, he would fire Gary Gensler and actually get like crypto back on the map. You know what I mean?
VPN though. I mean, you could run a virtual business in Portugal.
You know what though? So yeah, well, you can use a VPN. Question is, do they do KYC? Are they going to ask for like a social in whatever country you're in, or are they going to look for, you know, an address or something like that? Let's see, Deribit.
Easy
They
to
work with
establish
Facebook
boots on
things.
ground.
We can add them very easily. If we want to add this broker, we could add them quite easily. I mean, I guess the options part of it, maybe that would take some work, but I think this is very interesting. I was actually speaking to one guy that was bought one of our courses back in the day. This guy, Adam, I forget his last name now, but he's like this really great crypto trader, and he made like a crap load of money last time there was a big crypto boom. He turned like 5 grand into 70 grand in like a year. I was like, holy shit, this guy's like has golden fingers kind of thing. But so I like listening to his like opinions on crypto. He's actually Kleiny is like his name inside of our Lumewell server. He's in here every once in a while. He talks crypto, whatever. Anyways, he recently started trading crypto again because who wouldn't, right? Like the world is significantly geared towards that again. But he was using leverage, and specifically he used leverage by using margin trades. Now, I don't know, for those of you that have been trading for a while, you know what I'm talking about. But for those of you who are newer, you know, margin trading has like you can make a lot of money off it. So basically trading on margin, what that means is you borrow money to invest. So let's say I put in, you know, $1,000. If I trade on margin, I could trade, for example, KuCoin, I think allows you up to like 5x margin. So I could turn that $1,000 into $5,000, right? So now instead of using, so I put in my 1,000, I borrow 4,000, and now I have $5,000 I'm investing with. So if I'm right, I can make a crap load of money. Okay. But now the problem with trading with margin is that, and this is what most US brokers allow, is margin trading, which is stupid in my opinion, because this is like the worst way to trade with leverage, is margin trading. If I did that 5,000, okay, I put in 1,000, I borrowed 4K, let's say I'm right, okay, and it goes up by 10%. All of a sudden, my 5,000 goes to 5,500. And now what I have goes from 1,000 to 1,500, right? Because I owe 4,000. I have a $5,500 account. So I've made $500 on $1,000. So effectively, a 10% return has turned into a 50% return because of margin. Fantastic. I made money, right? But the problem is if it goes against you, right? If it goes the opposite direction, and let's say it falls from 5,000 down to 4,500, now I've lost money. I've lost $500. My $1,000 turns into 500. And normally, you know what, if I'm leveraged in different ways, that's not a big deal, right? Because it's like, okay, fine, I lost some money. I'll just hold on to it. If you're trading with margin, they force you out. They force sell you. So you can go to zero very easily, right? It's not a good way to do margin. But if you're trading options, if that happened, let's say it fell and then went back up again, you're fine. I can just wait it out. For example, for me, like you guys know this, I've been talking about this for a while. I've been trading Coinbase, right? I own Coinbase call options. Crypto got whacked last week. We got hit pretty hard. All I did was just hold on to it. I'm like, okay, fine. I'll just wait. You know, I didn't get kicked out. Nothing blew up in my account. It fell by a lot. I lost the value went down by like 40, 50,000 in like a week. I was like, holy shit, this is a pretty big loss. But I didn't sell it. I didn't have to take that loss and turn it into a reality. Now this week it's back up again, and you know, my account's at an all-time high. So anyways, point is, I personally think using options as trading instruments makes a lot more sense to do leverage with, right? There's a limited loss to them, right? And you don't have to get into forced sell situations. So I think this would be great if we could actually I think he sent this to me too. I told him the same spiel, and he actually sent me Deribit. Let's see if I can create an account here. Let's see. Country of residence. This is the kicker, huh? What country is it okay to say? What if I say Canada? You said US doesn't work, right? Is that right?
No, last time I checked, they didn't accept US. They stopped doing it. Could have changed, but I doubt it.
But what would they accept then? Restricted countries. Let's see. My guess is if US doesn't work, Canada is the first one on the list. Great. Somalia, United States. We're on the same list as Somalia, guys. That's great. So what would work then? What if I said I'm from Poland? I have a Polish passport. See if they even check that. Country is banned. Possible via IP check. Okay. I'm gonna try my VPN for a second, guys. I might lose you for a sec. Just curious if this is gonna work. Yeah, Aaron, yeah. For some reason, Canada and the US, I don't know why they're so against crypto. It's like they think that everyone's stupid. That's what it seems like. You know, like they treat people like children. Okay,
I mean,
so let me
the numbers kind of support them on that, right? Tremendous amount of our GDP is lost to just fraud.
Right, but there's a difference between fraud and not allowing exchanges that have derivatives. You know what I mean? There's a difference. Fraud, I agree with you 100%. There's way too much crypto fraud. Like there's so much of that going on that it's scary. Like my brother-in-law, he just lost like $30,000 falling for a crypto fraud. It's just crazy because I'm like, why the hell did you not ask me? Like I could have told you in 2 seconds, these guys are a fraud. We Googled the company that I worked with, and it's like you got 1 out of 10 stars, and everyone said this is a scam. It's like all you have to do is Google them. It's the first thing that showed up. But even my brother-in-law, he got scammed for like 30 grand with one of these scams. So I agree with that. But there's a difference again, like there's a difference between fraud and like people just stealing your money versus, I want to use derivatives or I want to use options or something like that, right? Those are two very different things, right?
Oh, for sure. But your average person doesn't see nuance.
Yeah. I guess it's still a new regulatory environment, right?
Yeah.
Either way, okay, let me turn on my VPN. I might lose you guys for a second. Be right back.
All right, you're back now, Robert.
There we go. Okay.
I'm looking at the Deribit KYC requirements. It says that you probably will need to upload a photo with a government verified ID from your device that you registered on. So I don't know if it's going to work.
Well, I have a Polish passport. That's why I'm doing this, right?
Oh, well, that might work for you then.
Right? My mom did that for me when I was a kid. So, oh, hey, it worked. Look at that.
Boom.
They didn't even do a KYC. All right, okay. Why am I not logged in though? That's weird. Wrong username, password. Didn't I just do this? What the hell? I just registered with this email address and this password.
Maybe verify account in the email.
Oh yeah, maybe. Okay, let me check.
Didn't you type in Grezer somewhere?
Yeah, this username, but it's asking for email address. That is the username that I use all over the place. What the heck did my email go? Oh, there it is. I have like a million tabs open. What's this? Let's see. Durbit. There you go. To trading. Again. Still, it giving me a hard time. Thank you for accepting your terms of service. Sign up notification. Confirm your account. Your account has been confirmed. There we go. Okay, I'm in. It didn't ask me for KYC or anything. So if we want to use this, this sounds like a potential good thing to use. Okay. So if we want to actually trade options with these guys, we would have to modify LumiBot a little bit because currently we don't have support for any crypto exchanges to do options. But I'd be down to play around with this a little bit. I guess to send the money, we'd have to send USDT or something like that, right?
What is USDT?
It's a Tether. It's a stable coin.
Oh, okay.
Yeah, it's basically a crypto coin that's tied to the price of US dollars. So it's like you moving US dollars around the world, except you're not using the US banking system, essentially.
Huh. Neat.
Yeah. Yeah. Definitely very useful in the crypto world. Okay. I'm gonna mess around with this a little bit. It's cool. Okay. Yeah, and we can actually use this. It's with CCXT. We'd actually add this exchange quite easily, at least for basic trading. For options trading, I have no idea how the heck that would work, but I'm sure it wouldn't be that difficult to figure out. Dare a bit. Cool. Thanks for saying that. Yeah, I'm
No
gonna get off the VPN because this is just gonna slow things down. So I'll be right back. Yeah, you guys are still there?
Yep, we're still here.
Okay, perfect. Okay. Yeah, this seems promising using Darebit. Yeah, but switching VPNs got this algorithm all screwed up. This is for what? USO. Wasn't doing that well though. 60. Actually, I guess it wasn't that bad. 63,000, 40% through. Maybe we should rerun that at some point. Liz, these are actually doing quite well. IWM, gold. These are performing very well. Not as well as this though. Look at this. 73,000 and we're only 28% through. The SPY just seems to be like the best thing to trade here. Or at least this with the trailing stop. I'm really interested to see what the graph looks like when it's all said and done. Okay, so we're working on pinning the trade. That's currently a back test in progress. We tried trading multiple symbols. We're back testing a bunch of those. We haven't done sentiment analysis yet. We haven't done SPX. That's gonna be a bit harder to do. We could do volatility smile. What would you guys rather do? Would you guys rather try doing something with the sentiment analysis or something with the volatility smile?
I think volatility smile is a little more straightforward. Sentiment is very difficult even when you know what you're doing.
We already have code for it. Like, I don't think it's gonna be that hard to do because we could just use the code from this one. They have this one right here. Filbert utils, like we could just use this thing here. They've already done the work for us. We already
You
have.
can also, sorry, the volatility index, the VIX, you can also peg it on that. If the VIX gets above X, then no.
Yeah, we're already doing that. We're using implied volatility to do that. I think it's a great idea. When we did add that, it did actually work very well, but we already have that in the algorithm. We could improve on that. I'm sure there's some additional things that we can do, right? Like maybe we could trade it a little better or whatever, but we're already paying attention to volatility. The volatility smile, however, is different, right? Because this is now, it's not just the level of volatility, it's the level of volatility throughout the different strike prices, right? It's like, what's the shape of the volatility, right? I'm running this in debug mode. It's gonna be a little challenging to do this without debugging because I don't want to stop this because it's been running for 30 minutes already, so I don't want to interrupt that. Let's see here. Where would we even do this? We get EDX and Pierce. Got Greeks. There it is. Got gamma risk data. There's where we get our implied volatility. So I guess what we need to do then is we need to get, right now we're getting Greeks at the money asset. But we would need to get Greeks for the entirety of the butterfly. So say the wing size, so create butterfly on the last, so it'd be somewhere inside of this function, I think. I feel like we're gonna need to clean this up at some point. For those of you that guys that are coders for a living, I apologize for my messy code because we kind of just made functions that are like crazy long. If I was doing this in a production environment, I'd clean it up a bit. And I feel like we actually kind of need to refactor at some point soon because it's starting to get a little ridiculous. So here, I think we would put it right here. We would get the call by order and the put by order. I think we'd want to get the Greeks for those, the implied vols for those, and the implied vols for this. And we would say, are we going to go through with this or not? Or how would that work, Kevin? Would you put it on or not put it on? Like how would volatility smile even impact this? Like, let's say we had a big smile versus small smile versus like how would we trade differently based off of that?
Well, I think there are, most recently, I think the volatility smile has been more extreme, where the out of the money options implied volatility is higher than at the money. And that basically hurts option pricing for butterflies and iron condors. And it also, so at the moment, I'm treating this as a diagnostic for our, when we want to correlate our trades and our profitability versus what the market is giving us. Like if, for example, there's a extreme volatility smile, we can expect lower profits from this type of trading. And if that is the case, then is there a countermeasure that we can employ? A countermeasure might be, well, in order to optimize the return when you buy two at the money, a put and a call, that money you get to keep, but then you have to buy the wings to reduce your risk, your volatility risk. And in order to optimize the price, you want the out of the money wings to be as cheap as possible. Now, what's pushing the price of those out of the money wings is the implied volatility. But a countermeasure would be, well, just buy strikes further out of the money. That would reduce the overall cost. So currently what we're doing is the out of the money wings are within the expected move. We said the expected move was X, that's where we do the out of the money. So if the volatility smile is very high, we would just add a factor to say, let's go further out of the money in order to optimize our profitability. Does that math make sense?
Well, I didn't hear you talk about math, but the concept I think makes sense. Basically, if there's a smile, you want to go even further out.
Right. We did try to do that at one point. We tried to optimize by adding a delta to the wing size. But we did that across the board. I think what would be more suitable is to adjust to the market and the volatility smile for that particular option trade. And I think we can do that if we gather this data. That is, what's the implied volatility of the at the money options and then the out of the money options. And if that is, very significant, then we might have to make the wings bigger. For example, that could be one scenario.
Okay, so if we have a big smile, then we move the wings out further. But I mean, I guess like how much further and how big does a smile have to be to do that?
Right. That is, I think we have to determine that empirically.
Yeah.
And how does that affect the net profitability? There's definitely going to be a compromise here, because what would happen is there's always puts and takes with option trading, right? So
Right. Yeah, I think
well, for me, I mean, it's late at night for me, and I think unfortunately I may not be able to see this through. But if we could get the diagnostics in, that is, let's see what the volatility smile is and see if we can get that data and see how it impacts the profitability curve. For example, when you look at the profitability curve, I don't know, I've seen it so many times I practically memorized it, but in the last year, the slope of our profitability curve has been flattened quite a bit. And I think it's because of the volatility smile that, we're not getting as much premium. The initial premium is not there because the out of the money options have higher implied volatility and higher pricing.
Mhm.
So I'd like to be able to see that empirically by collecting that data.
Okay, I think it's a good first step. I mean, that's pretty easy. What
Yeah,
we could do is we could just add a marker every time that we create this thing, right? We could put in the detailed text, we could say size of the smile or whatever, right? Like we could just add that in.
yeah, I think that's a good first step. Is just see what is the correlation.
So I guess all we need to do is we go get the implied volatility of all the assets in the butterfly.
Yeah, so the wing size might be, I don't know what we did, maybe 75 wide or 100 wide. Again, it's all part of that implied move calculation. But if we could go like maybe 100 wide or something like that, we'd be able to get a readout on what the volatility smile is doing for that particular time period.
Okay. So we could basically just do this. We just get the Greeks for each one of the things that we put on in the butterfly, whenever we put the butterfly on.
Yep.
Get the Greeks, we'll get the implied vol for each one of them. And then I'll put it into basically, actually, I don't have that up right now because none of these have finished yet. But I'll basically add all of these IVs to that marker. And then I guess we don't just want to know all the IVs, we also want to know the difference on the put side and the difference on the call side.
Right. So yes, exactly. We would know what we want to calculate a difference. For example, you might say we have a call sell and then we have a put. Well, hold on. The terminology's got me a little confused.
So this is what I wrote in the code. So
Yeah.
I've got the implied vol for each one of the options, the
Yeah.
call sell, the call buy, the put sell, and the put buy. They all have
Okay.
implied
Yeah,
vols.
I got it now.
I'm printing out all those. And
Yeah.
I call side IV diff, which is a call buy implied volatility minus the call sell implied volatility. And then we also have the put side IV diff, which is the put buy implied volatility minus the put sell implied volatility. That should give us, I think, enough information, right?
The only thing about the absolute is that it will, I think we need to know the SIGN of that difference,
What is that?
the sign, negative or positive. Because right now you have the call buy and the call sell. Like for example, that could be a positive or negative number. But if you take the absolute value, then, for example, in the case where it's smiling, the out of the money call has higher volatility than the at the money, and that would be, in this particular expression, it would be call by the call. Yeah, that would be a positive number. But if it's a flat volatility smile, it would be, it could be
So
a
don't do
negative
absolute.
number. Yeah, that's all I'm saying. Yep.
That was the AI that did that.
Oh, okay.
Put absolute
Okay.
name.
Gotcha.
So I removed that. Okay. So now we'll know I guess whether it's curving up or curving down, whether it's like I guess a smile or a frown even kind of thing.
Or just flat,
Or flat, yeah.
we're trying to, monetize this a little bit.
Right. Okay. So this should produce those values.
Yes.
So if I run this, I don't have my debugger right now, but what I can do is I can do this on a very short time frame. I'll do back testing start. We'll do just the month of March. And I'll run this and we'll see what the results of that are.
Yeah, that's perfect. Let's just see what very short time period. Yep.
Python options butterfly condor main. Okay. There you go. So 15 days should finish quite quickly. We should get this data pretty fast, or at least we'll see if the data is working. And if the data is working properly, or if it's showing the data properly, then we could do a longer time period.
Yeah, so in different market regimes, you'll get different slopes of this volatility smile. So, yeah.
So we're basically looking at, oh shit, which one is this? This is the butterfly created. I just want to look at butterfly created. So here is, well, it's not very easy to read, huh? Why is this not, I may do a new line. It's ignoring that. I swear I've done this before with other things. It worked fine. Why is that working, but this is not? Let's see. Condorized. Let's go condorized. Condorized. Rise downside. Condorized on the downside. Oh, because it's ignoring. So it's technically in here. This is really hard to read.
Could we just isolate the volatility smile parameter?
Yeah, we can make that just a different thing. So why don't I do that instead? So we'll go this whole part here. Weird that that's ignoring. I guess I understand why. Smile detail text. Detail text split. What the heck? I don't think that's necessary. Let's go add. Okay, let's run this again. Let's see what happens. There it is. It's a little easier to read. Call side IV diff 0, put side IV diff 6. Call side 0.73, put side 5. Call side, that seems like quite a big difference. Call sell, call buy. Seems
Oh,
like
good. There's quite a skew in there.
Yeah, big
They're
time.
not symmetric at all.
Yeah, not even close. They're very different.
And I've also heard people looking at this volatility smile skew to see which way the market might move.
Yeah, to me, looking at this, it sounds like people think the market's about to drop.
Actually, I've been looking at that, and people are afraid the market's going to drop because it just seems unrealistic. It is slowing down quite a bit.
It is, yeah.
I think the option pricing reflects the fact that people are expecting the market to drop at any moment.
That definitely seems to be the case here. Like the skew is quite different on the put side and on the call side.
Yeah, the put side is just, yeah. And that reflects in the option pricing. Absolutely.
I've actually heard of strategies before where people look at this stuff like the option pricing to determine where the market's going to go next. This makes me think of that.
Yeah. So the market is pricing in a skew to the downside, and the option pricing is reflecting that.
Yeah. This has been going on for almost the entire month.
Yeah, I think different markets, the skew goes in different directions. Like we were looking at this, like for example, in 2023, I think the skew is probably completely different. That's when the strategy was really outperforming quite a bit. But then, 24, it's been quite flat.
This is very interesting. Okay, so now we have this stuff, so we could actually run this. We could run this over a longer time period just to get all this data. And you could see, does this correlate at all with actual returns on our strategy? And if it does, then we could figure out what to do about it, right?
Yeah, and it'll definitely affect the option pricing for sure. I wish I had a better answer for you, but I haven't done enough research to give you something more definitive.
No, that makes sense. But at least we have data now. Have you been running this stuff on your computer, Kevin?
I have not. I've had difficulties running on my computer, unfortunately.
Do you need some help with running it? Because the reason why I asked that is because if you could run this and you can get this data, then that could help
Yes.
you actually go through and manually see, kind of what's going on.
Yes, I've been trying to get that faculty together, but my mom's been in the hospital since January, so every weekend I go down to Pennsylvania. In fact, that's where my wife was tonight.
Sorry to hear that, by the way.
Yeah, so what I would like to do is look at your calendar and then get a slot and make sure that I can get everything I need to run on my home machine.
Sure. So let me get that for you right now. Just Calendly, there it is. Here's a link to my calendar.
Okay. Yeah. I probably just need 30 minutes and I think I'll get through what I need.
Yeah, it's probably something simple. I mean, if you want, we could even try to get through it right now. Like, I don't think it'll take very long, to be honest with you.
I'm spent. I'm sorry.
Yeah, you don't want to do it? Okay, no problem. That's perfectly fair. That's no problem. Yeah. No problem.
It's probably something really stupid I'm just overlooking, and it's just like, oh, okay.
That's
I'm
what I'm
gonna
saying.
embarrass myself in front of everyone on the call.
It's definitely no embarrassing. Don't worry about that one. Everyone's got their own things that they don't know what to do.
Yeah.
The fact that you know this much about options is way beyond, I think, most people on this call, if not everyone.
Well, I'm just fascinated by it because it's such an incredible, has incredible leverage. I mean, it is a little bit complicated, but I think the thing that makes it complicated makes it more interesting. So I just find it fascinating.
Yeah, I agree. I definitely agree with you there. Yeah, we're getting pretty deep into all these back tests here. It's still going to take like an hour for most of them. This one's actually doing pretty well. It's 50% through. We're at 109K already. This is the one with allowing it to pin. It shot up really fast at the beginning. Now it's kind of stalled out a bit. But it's pretty impressive how fast it went up to 100K. I don't know if you've been watching it, but I didn't want to say anything if someone else was talking, but it went from 35K to 100K in like the first 15% or something. I was like, holy shit, it's moving really fast. Now it seems to be going sideways for a bit, but I have a feeling that this is actually going to be one of the big breakthroughs that we're looking for. Just allowing it to go further, doing the trailing stop or allowing it to pin, I think could dramatically increase the returns. That's what I think. Because what was it? Our best back test Let's just take a look at this. We can ballpark it, right? Let's say this thing is halfway through. So halfway through, we're somewhere around here. This thing was up a little over 200% halfway through. This is way past that. 100,000, 110,000. What is that? That's 110,000. 110 divided by 35. That's 314%. So it's as if over here, it wasn't at 200, it was up here almost.
Yeah.
So it's
In this
already
current test-
beating the last algorithm.
In this current test, have you kept the position size the same?
Yeah, position size, everything else is exactly the same, except
That's awesome.
for the trailing stop. That's the only
That's
difference.
awesome. Wow. Awesome.
So I have a feeling this is going to lead to more than 89% a year if it continues on this road. And it hasn't even hit this part yet. This is the part where it really takes off. Right? Like up until now, it did well, but then this part, I think this is just going to be this monster that goes way off the charts because this is being limited by the take profit, probably.
Yeah. Yeah.
Right?
Makes sense. Oh, can hardly wait.
Yeah, 118,000. So wait for this thing to finish up. Yeah, I agree with you. I'm slowly starting to slow down here. My brain is not working as well. What we could do, it's up to you guys. I mean, I don't mind waiting a little bit longer to kind of just see where it goes. But I think we finish up soon. I can post all these results to our Discord channel once they come out. Some of these are doing pretty well. Look at this. This is IWM is doing pretty well. Gold doing pretty well. It's at 100K halfway through. American Airlines, not so hot. I have a feeling individual stocks are probably not what we want to be doing condors with. I think there's just too much volatility in individual stocks. I think indexes or commodities or something like that would be better. This is the Qs. These are doing quite well too. But look at this, 50%, it's 108K.
Well, you know, some of the things that we have there, like gold, they don't have daily options. This is supposed to trade daily options, right? So maybe it's
Yeah.
just a couple times a week.
Yeah, it automatically ignores it if it's not there. Notice here, it's can't find option contract for, right? Just like skips it. Which is also why it's taking so long to backtest. So it's like trying to find contracts that don't exist.
There are other instruments that track gold. GLD is one of them, of course, but I have to. What other instruments are there? There's
GDX tracks it, but
So
it doesn't have
GLD is the
daily options
biggest.
either.
that's the biggest. Okay.
Yeah. IAU, another big one. Similar volume. I mean, I would think that the biggest one has the most amount of options on it.
Probably. Yeah, okay. I mean, there's also the miners, but
Right. Like Barrick Gold or whatever. Those are pretty big ones.
yeah.
Let's see, biggest gold companies. Newmont. Barrick is number 2. Actually, no, and by revenue, it's number 1. I did actually a project on these guys back in grad school. So I learned a little bit about the gold industry and how to value a company like this. These are actually pretty easy companies to value. It's like really just about how much gold do you have, how much capacity, what's your cost. It's actually really simple to value companies like this. But Barrick Gold, you know, we could trade that, right? Like how does that compare? Gold, GLD, the commodity versus Barrick Gold, which is, I don't know what the ticker is. Let's see. Barrick Gold Corp versus GLD. Barrick seems to move a lot more than the commodity. So my guess is GLD is the better one to actually do this on.
Yeah, yeah, I would agree. Yeah.
Yeah, it's even outperformed it too over the long run, which is kind of surprising if you think about it. I would think that the company would do better than the commodity because the company is mining that commodity and selling it. It's a for-profit entity. I would think that the stock price would do better for Barrick, but I guess not. Okay. Yeah, look at this, 60%, 175,000. Look at how high this thing's going. I have a feeling this is going to be our new best back test. This is very extreme. We're at 174,000. 174 divided by 35. This is at 5x already. You know, I bet you it's going to shoot up much higher after this. Fell a little bit, but I bet you it goes up a lot more.
Wow.
We'll see when it finishes. You don't really know what the back test until it's completely done. Aaron says, how about a REIT? I think that'd be an interesting one too, actually. We could try using a REIT. I think that'd be pretty cool. What are biggest REIT, biggest REITs? Yeah, REITs tend to be pretty stable. I agree with you on that one. Prologis, PLD. Yeah, it's pretty stable. Trends kind of sideways. Big collapse here in 2008, not too surprising. Yeah, we could run that. Stock symbol O. What is O? Realty Income Corp. Okay.
Yeah, that's the
Maybe
granddaddy of REIT.
the granddaddy of REITs, huh? There it is, Realty Income. It's a 35 billion market cap. Prologis is a lot bigger. Triple the size almost.
Oh, that's commercial real estate.
Yeah, they're probably not doing so hot lately.
Yeah, commercial real estate's not doing so hot. Yep.
Yeah. Yeah, you can see here. But again, it doesn't matter if it's going up or down, right? As long as it's within the volatility range, right?
Yep. Yep.
Okay. Let me do this then. So we'll run this on that too. So we'll set this trailing stop, set 0.25, we'll go none. And I'll run this on O. And I'll run this on PLD. Why not? It's easy to do, right?
You got the big fast machine.
That's it. I'll just run it. Honestly, this computer was so expensive, but so far it's been really worth it. Like this is everything. Like when we're doing this, right? Like I mean, the faster computer just allows. Like, look at how many things are backtesting at once. My old computer would be choked up on just one of these running at a time, and I have 1, 2, 3, 4, 5, 6, 7, 8, 9 running at the same time. It doesn't seem to be impacting my computer at all. Zoom is fine. I have like 20 different browser tabs open. Like it's incredible what this thing's able to do.
That's unbelievable. Wow.
Yeah.
Now we all have computer envy.
Well, I can run it so that you guys can see the results, right? Like that's the whole point.
That's the point. Yeah.
Yeah. Okay, so let's see here. So we're about to start getting some results. I'm gonna close a couple of these up. I'm closing tabs not because it slows down my computer, but because it's just way too many things open. This thing, Unitree. I wonder if this thing is real. Okay, so here is on the QQQ, 68%. Okay. Not as good and lower max drawdown. So the SPY was better than the Qs. Mind you, though, if we do both of them, would that do better? Right? Just because the SPY is better than Qs doesn't mean that if we did both of them, that it wouldn't even have a better result. I mean, they're fairly highly correlated, right? So maybe not, I don't know, but we could attempt that. We could attempt, running both at the same time, 10% each, and seeing how well they do, right? Like we can modify it to do that. So that's the result. And what was the final value it got to? 301,000. So 301,000 is the best one, or is that there? Look at this. This is what the pin thing. It's at 183 and it's only 64% through it. I have a feeling this is going to be our best back test. Got these running now too. O and PLD. Okay, so we can say this one is done. American Airlines is not really doing very well. I think we could probably stop this one. It will probably speed up our other back tests if we stop this one, I think. Because look, it's 67% through and it's only at 49,000. So what do you guys think? Stop? No stop? Would you rather see the end of it?
I think we should stop.
Yeah.
Yeah,
Stop
let's
it and-
stop.
Okay, so we'll stop that. This one, gold, doing pretty well, 130,000. The Qs, I think, got to 300. There's only 63% through, so I think it's a contender to actually either match or beat the Qs. This one's doing very well. Look at this, IWM. Kevin, I think this is the one that you originally started doing it with, was Russell, right?
RUT, but IWM is
Same thing, right?
same thing. Yeah.
Almost the same thing. But yeah. This is doing very well. I mean, it's 224,000, 69% through. I think there's another contender for potentially beating the SPY. This one does not seem to be doing very well. DUK, you guys want to stop this one too?
Yeah, we can go ahead and stop that one, I think.
Yeah, it's barely made it. It made 4K over 2 years. Yeah, I can say that's definitely not doing well. Okay, this one, USO, that's the oil one. 78,000, 59%. Not great, but not terrible. This one's doing very well. This is the pinning or the trailing stop. Yeah, definitely very interested to see how this ends up. And then we have these two new ones that we're running.
I'm sorry, guys. I'm gonna fade out.
Yeah, no problem. I'm starting to fade a little bit too, personally. Maybe what we can do, we can end things now. And then you guys are all following on Discord, right? I'm assuming all you guys have access to live algo hour on Discord.
Yeah.
Yeah. Okay. So when we get the results, I'm going to post it in here.
Oh, great. Thanks.
So as these things come out throughout the night, I'm still going to be awake for a little bit because I have to take care of the baby, make sure my wife doesn't go crazy. But I'll just let this thing run, and then when the results come out, I'll just start posting them into here. All right.
Fantastic. Great.
Hey, Robert,
Thank
I
you,
do
Eddie.
not have the live algo hour on Discord.
You're in our Discord though, right?
Yep, I'm in Discord.
So what you probably have to do is click on this thing right here, and then click on show all channels. That's usually what the problem is for most people.
Look it out.
right? Let me know if that works.
Yep. Got it. Thank you.
Perfect, no problem. Okay, so I'll throw that in there when we're done. Cool,
All
okay.
right, great session.
Yeah, this is definitely very interesting. These back tests takes such a long time. I wish we could have more of the results finished by the end of this. But at least they're going, we can see the progress throughout. Like I said, we have two people that are going to be working on speeding up our back tests. So if they strike some gold, if they could actually, I guess gold, whatever, a little bit of a pun, but if they could figure it out, how to speed this thing up, then in future sessions, I think we could run this much quicker. It would be amazing to be able to run these back tests in like 30 minutes as opposed to 2 hours. I think that'd make a big difference.
At the very least, it would speed up iterations, right?
Yeah, exactly. And that's like such an important part of this, right? It's like you test your thesis, are you right or not? And then you can like, right? Like that's a whole process that we're going through here, right? And the faster iterations, the faster I think we'll find things that work well.
Oh yeah.
Yeah. Although this is pretty damn good. Look at this. EWN. This is doing a lot better than SPY so far. Maybe we shouldn't be doing it on SPY. I'm starting to think that.
Yeah,
Maybe you're onto something.
I would agree for sure. Yep.
Yeah. We'll see
All
what.
right. I'm gonna wait for the update tomorrow.
Okay, sounds
Thanks,
good.
Robert. I really appreciate everything you're doing here.
Awesome. Likewise.
Good night, gentlemen.
All right. Good night,
Good
guys.
night.
Good night.
Bye.
Hey, great work, you guys. I'll send some optimization modeling into the Discord.
Awesome. Looking forward to it.
Great work, Robert. Thank you.
Thank you. Awesome. Have a good one. Good night.